It's time, so let me take a moment to introduce our guest for today. So today we have with us Safir Anand sir, a well-known lawyer, a brand specialist, an author, a best-selling song and artwork, also a startup investor and an equity investor. He's frequently quoted by media for his views on market, companies, economy, legal, and branding. So many awards and so many good things about sir that it will take me a dedicated space so as to elaborate on those. So I would pardon me for that, sir, because that that would in itself be going to be a very long thing, but I welcome you. And it's our first dedicated spaces with you. On previous occasion you has joined and shared your insights with us, and those were really helpful for our audience, and today also we look forward to many more insights from you. So Safir sir, and just in case I missed or maybe anything on the introduction part, so I apologies for that, and I request you to suffice that. And after that I would request you to start with, as far as investing is concerned, how it started for you, sir? Some legacy from the family, or it was you who started it first from the family, sir?
Thank you for hosting me this evening. You've been extremely kind and much more generous in the description of what I do. We are all, may have accomplished anything in the past, but it all amounts to zero if we don't accomplish things ahead. So every time in life we start from nowhere, hoping to just get better and to do our best. And if we are lucky, life rewards us, and if we're not lucky, we learn and hopefully get better. Thank you for your lovely introduction. You did not leave out anything. In fact, you elaborated way more than I'm worth. The As far as this learning or introduction into the market is concerned, see, market did not come to me by inheritance. Therefore, there is not even a single record of anybody in my family, either my parents or before that my grandparents, being anywhere close to the market. In fact, at a certain point of time in life, whatever was being earned by my parents was going into expenditure. It was not as if I was born with, with an inheritance, or the family was sitting on so much of wealth that I, had a silver spoon, literally, as they say, in my mouth. We were a very average middle class family, and we were happy with what we were doing because the work was innovative. My parents, my father and my grandfather were ahead of their times when it came to what they wanted to do in law. Both of them were lawyers, and having come from a family of lawyers, there was therefore no question of investing. Investing actually came to me initially during my exposure to the Shriram College of Commerce, which is also known as SRCC, from where I'm an alumni. And there, a lot of people around me were very, very competent to understand balance sheets and to be talking markets, which sometimes, went over my head. The only advantage that I had before that was that at a very early age, which would mean when I was probably in the 11th or 12th class, with actually no means of money. When I say no means of money, means no savings. I knew that equity is essentially something which is good. I did not know how to go about it. I did not know whether you have to buy 10 shares or 100 shares, or 100 shares means 100 shares of a single company, because that time their shares were in physical format. I didn't know where to get that money to invest, etc. So the only thing I knew was that at one point of time I was trying to buy too many companies. So literally my scorecard at point of time was to own more companies and not concentrate on whether they were good, bad, etc. It was just that I felt proud that I had, for example, I'd bought 20 or 30 shares or even more, and their quantities were very minuscule. And it only fascinated me that I could have the ability to enter them at a certain point of time. And then I realized that half of them ended up being duds, because the point of buying them was essentially to look at the sector P and to perhaps buy the cheapest guy in the sector, as long as he was profitable, thinking that somewhere there will be a PE rating and he will move up because he was the cheapest. But this is not how investing was meant to be done, and therefore the starting years were not good as an investor. I lost the capital that I would have put into many of these companies. And in a way, they always say that there is a blessing that if you make mistakes early in your life, then you pay a lesser price for it. It is very debatable because while I did pay a lesser price, as in my capital was limited, but we also know the importance of limited capital when you are small. So I don't know whether it was a good thing, but thereafter a period of time, I decided that I will buy more reputed companies. And the more reputed companies' problem was that they were all expensive. Expensive means not in terms of valuation, but beyond my monetary means to buy them. And therefore, I would, find fractions of those shares. That time, it was not like you could buy one share, but I would buy fractions of those shares, which were called as odd lots, in a special trading session that was conducted in the markets, usually in a separate window. And then I collected those. And after a period of time, when those shares started getting collected, it wasn't the fascination of the stock prices that was appealing to me, but the fact that I started saving money, in the sense that it did not matter to me that I started my capital market journey with an investment of only 4,200 rupees odd. And it did not matter to me that time that 4,200, how much it had become. It had actually, I had a bad experience when I started in a company called Nagarjuna Fertilizers, which I had to eventually sell off at 13 rupees, and I lost my capital from 4,200 to 1,300 odd. But what was important was that when I started buying these quality companies like a Colgate, like a Bajaj Auto, at that point of time, these were the bluest of blue chips, or any Tata company. At some point of time, I realized my portfolio had hit 10,000 rupees. And then the 10,000 became 20,000 rupees, and the 20 maybe became 25, 30, or something like that. Eventually, I hit 1 lakh, and I felt I was on top of the world. I mean, because for me to have saved that 1 lakh was more important, and to have got into a process of sort of trying to discover. So it was like literally like a khazana, or when you have a piggy bank and you open it one day and you discover that that small bit of investment that you were doing of a few hundred rupees here and there had become 1 lakh rupees. And then I realized that what am I still doing? I like it, but why don't I learn it? And the best way to learn it was to read more, to observe more around the success of other people, books. There used to be very good magazines internationally, like Barron's, etc., which I could not buy, but at least they were available in some libraries to read. Uh, there was not so much of television coverage on stocks, but I would read the newspapers to see, what was happening in terms of the stock prices and the news, etc. And of course, there were bouts of markets going up and down, which never made any sense to me because I did not have the capability. But I stuck on. And one of the good lessons that I would like to share with all the others is that first, be a willing person. That means be willing to learn. Secondly, be a believer, which basically means that no matter how small your means are, you will be able to use those means and to accumulate them just by a discipline of investing. So, because investing by function is a function of saving, and even if you manage to save little bit, even if it doesn't turn out to be right, it is actually not spent, and saving not being spent becomes disposable income over a period of time. So that is another good habit. And then be a learner, which basically means don't have a fixated mind. There is actually not a single book in the world that is actually right about investing, because somebody will say value, somebody will say growth, somebody will say commodities, somebody will say consumer, somebody will say tech, somebody will say this, that, India versus international. You have to have a mixed mind, saying that I will read everything and grasp what I can do and what is within my core competence to understand. And whatever is your core competence, build upon that. And then over a period of time, start rewarding yourself, literally by patting yourself on the back and saying, look, I thought of the stock at 15 rupees, it's gone to 30 rupees, 40 rupees, whatever price it's gone to, and I've done well. And now I'll try to repeat my success. It is like a manifestation that you send out to the universe, saying that I want to repeat it myself. And yet I will keep my mind open to the fact that I may make mistakes, but I will not make mistakes if I have 10 innings as a cricketer on the field. I will not make the mistake of getting out on the same ball every time. So you have to have that mindset, and then over a period of time, experience teaches you a lot, and others teach you a lot, and books teach you a lot.
Fascinating, sir. Quite fascinating. So, sir, I mean, although you told that your investing style is evolving, but you have, if you were to ask, I mean, if I were to ask about if you define your investing process, so what would it be?
No, so when you say I divide my investment process, you mean how I identify investing, or what
I mean,
value?
you were talking about like there are value investors, growth investors. So if we go by that name, so if you were to define your framework in one word, what it would be, sir?
See, like I said, that each person will. It is literally like, you are doing an education of your own self every single day. Now, somebody may be extremely disciplined. I remember in one of the very early times when I was not even an investor, I used to attend presentations by some of the fund managers, and I found that while some, like most people, went to those presentations only to know what they were buying or what they owned, and what was their view on the market. My and I also went initially for that purpose. It was very obvious because I did not have the capability to generate ideas on my own. But initially, but after a period of time, I realized that the greater learning was to observe those people in respect of what was their strength. So instead of concentrating on whether they liked IT or they like consumer, I started thinking what differentiates this man from another fund manager, and whether I have those traits. So just to give you an example, that when was listening to sessions conducted by Mr. Prashant Jain, he was that time responsible for Zurich and later on for HDFC funds. I discovered that his core strength was his ability to meditate rather than anything else. So a man who does meditation is not perturbed by the movement of objects around him, and therefore his mind is focused, just like the like Arjun was focused on the eye of the fish. And I told myself that if I was to, for example, imbibe the traits of Prashant Jain, then I'll have to be focused on cutting out noise. So it was a learning that I put down in my diary. In the initial years when I would go to attend Mr. Samir Roda's presentation, he didn't even know me, and I had no ways of even saying hello. It was a big thing if I said hello, and even if he smiled, it was like a big, as if he had reciprocated. But it was not that he was reciprocating anything that I was doing, except that he was just being courteous. But I discovered Samir Roda's style of investing was to get the big picture right, which is the fact that, for example, if there was a telecom boom that happened in Singapore, and you had seen the success of Singapore Telecom, which was called Singtel, then he would use the same ideology to invest in Bharti in India. And maybe if he saw the success of Rupert Murdoch, then he used the same ideology to invest in Z in India. And if he saw the success of US banks and them becoming bigger vis-a-vis the state-owned banks, then he did the same ideology of investing in an HDFC bank at that point of time in India. So you imbibed, you adapted to the learnings. When I invested in, when I went to attend the presentations of Mr. Sanjoy Bhattacharya, who regrettably does not give interviews these days because he's one of the finest minds that I've seen. It's just that he doesn't like to come so much in media. And at one point of time, he was Prashant Jain's head. He was heading that operation. Prashant used to report under him. And I discovered Sanjoy Bhattacharya's mindset was panic. He would love buying the market in panic. And in times when the market was doing well, he would switch off his phone and he will play bridge. And so he would not let the euphoric market come and interfere with him, but in panic he would be jumping as an excited child, knowing that he's getting to buy value. And to that extent, he prepares an Excel sheet or a notepad of his pre-decided buys and the levels at which he wants to buy them. And if the price comes, then he jumps onto those opportunities. So whenever you see that the market falls because of war or calamities or any other obstacle, then he's one of the strongest buyers, and he makes money in that sense. Mr. Bharat Shah, for example, has a very different way. Mr. Bharat Shah heads ASK and is one of the largest fund managers. He has his favorites. His domain is a domain of picking favorites. So, for example, if Sun Pharmaceuticals is his favorite, then he remains glued on to Sun Pharmaceuticals and the developments vis-a-vis other pharma companies and continuously does a systematic investment within Sun Pharma only to become, for example, one of its large shareholders. So there are every different fund manager has a different style, and in my earlier years, since I did not have that expertise, I felt that let's learn literally from the Virat Kohlis and the Rohit Sharmas, if I was to call them, to see who's going to be pulling the ball and who's going to be, cutting the ball and who's going to be coming outside and lofting the ball over to the boundary. And then you hone your own skills, saying that, look, I can do 10% of this, 2% of this, 6% of this, or I'm very bad at doing certain things. And what I'm bad at, I will attempt it, because maybe I think I'm bad, but maybe I'm not. So, for example, if I think I'm bad at a commodity stock, I will attempt to buy it. If it works for me, then it is teaching me that I'm not bad, and maybe I know something. I may have even got carried away by luck, but if the process continues over time, then luck becomes skill. And on the other hand, if it is something that is completely oblivious, or something that it completely goes over my head, then I must avoid it and concentrate on my core strength. Because don't forget, in the market there are 7,500 tickets. When I call, those tickets are mean every stock is a ticket, and I don't mean a lottery ticket. I mean a ticket and as an opportunity. And out of the 7,500 scripts, you only need a handful of scripts to do better than the market. So to select those handful, you have to look at your own competencies and learn learnings from everybody else. Even from Warren Buffett, actually, Warren Buffett teaches you more from the mistakes he makes than from what he did not make, because you can't go back in time. You are not United States of America. You are not coming out of recession in the 1940s and then going through the baby boomer phase that started in the 1950s, when capitalism grew in India, in US at an unprecedented rate. You are not in a situation where Coca-Cola and other companies and American Express are at the starting point of their journey. In fact, if you notice that while there is so much of case study on Warren Buffett and Coke, in real terms, had he not bought Coke and bought Pepsi, he would have done better. But we learn from mistakes. We don't have the kind of capital. So, for example, Warren Buffett's number one teaching to any investor is not the kind of stocks he buys, but the fact that he buys stocks in a business model that generates a lot of cash that enables him to buy. So when he took over Berkshire as a textile company and decided to convert it into an investment arm, and later on when he bought Geco and other investment insurance companies, he was basically trying to concentrate on a constant cash inflow that will enable him to buy the market when it is in distress. So that's a learning from Warren Buffett, and we are grateful to all our teachers and all these people who have taught us, and also to the market.
Great, thanks. So one question before I hand over to Shashank to ask questions. So Safir sir, you recently tweeted that it's good that this market is not one-sided, and it is providing the opportunities as well as not giving heed to some good companies which a learned investor can surely work on and look for investment. So how broadly you are seeing and placing yourself, if I were to ask about the, say, on the incremental cash if you were to deploy today?
Yeah, before I answer that, I noticed that there are comments that have a problem with the Wi-Fi. Is that correct for many people still?
Sir,
Because
I checked with Shashank, Ron, and Ramanjeet, so they are confirming voice is clear. And I got not few, but some comments they are saying not proper. So we can do one thing: we can restart the spaces if that's okay, or we shall continue. The recording is going to be fine because for Shashank and me, it is proper.
no, I don't know. You can probably, like, because in the comment section, certain people are saying that the voice is dropping, and therefore, since I'm talking from my heart, I don't want some of the listeners who are trying to learn should be devoid of the whatever we have been talking, even if it goes into recording.
Right.
So I don't know. You can unmute a few people if they're talking about, if anybody has a concern in terms of the clarity, then we can log off and log on. It just means that again, some people will think the session has ended.
No. So we can restart. But Shashank, I think it's ultra clear, right?
Yes, I think it's perfectly fine for me. What you can do, Prince, is like from the comments, the people who are saying that they are not able to hear, invite them as a speaker
Yeah.
and try and see if that can actually help.
Okay. Um, Let me check with Ramanjeet if he's. And guys, please try if laptop is available, you can try listening from laptop also. So that might improve because at times when participation is large, such kind of issues happen. But for me, Safir sir, it's ultra clear. I mean, not even a small disturbance on my part. I can hear you loud and clear.
In fact, my request to those who are finding audio problems will be maybe they can log in again, because
Yeah.
I can see half the people are saying it is loud and clear and some of them are saying it is not. So maybe those who finding it that it's not clear can log off and log in again.
I think
We can pause for a minute, so allow you to. Don't worry, we're not rushed up for time. We'll allow you to log off and log in and be more comfortable, so that we can chat.
so. Ramanjit, it's proper. You're hearing it properly as a when you are not speaker.
Yes. Hi, Safir. Um, so yes, it is a good audio. I tested both on laptop on and mobile. Now I'm on mobile and I can hear it perfectly well in both the devices.
Oh, that's perfect. So maybe others can follow the same traits. For example, maybe they are having issues with their connections and they can re-log in and hopefully things will be sorted out.
All right, sir. So Sashank, you can ask questions, please.
Safir sir, thank you so much for firstly, for taking coming to the spaces and sharing all your knowledge. And I think the style that you were mentioning, that you were taking little bits and pieces from all the investors, that was so inspiring. And now I think the tables have turned. We guys, look forward to you to for the same role. And so my question to you is that since you have actually risen from the ranks and grown up your own like small portfolio to a a bigger level, when we invest, we look at competitive advantages in companies in general. So, uh, so my question is that for a retail investor or a smaller investor, what is his competitive advantage in investing as vis-a-vis the big institutional investors or the larger HNIs? What is what are the things that a small investor should focus on to maximize his return, in whether it terms of strategy, research, or anything?
Yeah, that is a good question. And my answer to that is that first thing that an investor should do beyond discovering stocks is to discover his own self, which is to ask his own self that I have this capital. This capital can be subject to a risk factor of which I myself may not be aware of the risk tolerance. So, for example, if you say that I have 100 rupees to invest in the market, and you tell yourself that what happens if this 100 becomes 90, and then it becomes 80, and somebody says, no, that 80 is not going to disturb my standards of living and it will not perturb me to run away from the market, then he has a mindset of coming and saying mentally he's framed his mind to think that a portfolio stock of 100 can go to 80. But another guy says that, look, I don't have the appetite to see a drawdown. It's not as if he may not have the financial means, but some people cannot take it, and they say that, no, how can I be so irresponsible that a 100 rupees stock becomes 80 rupees? I can't take it. It takes away my sleep. It takes away my ability to enjoy the food that I have. It creates a sense of discomfort and lack of confidence in my mind. Then he has to tell himself that, look, if that is the case with his investing, then he's probably better off by sort of doing a SIP in an index fund, particularly if it is a large index fund, as opposed to a mid or small cap index fund, because market volatility usually has not been to the tune of a 20% drop at the index level as it can be in the case of an individual stock. Of course, in times of COVID and other things, there have been extraordinary drops, but those are rare, and rare events do not necessarily mean the rule. It does not mean that they cannot recur, but it is not the rule. And, anyways, even if they occurred, they always recovered. So it was only a question of a matter of time. Now, patience is also a virtue that some people have and some people don't have. I'll share an example with you today. I was holding on to a stock since the year 2013, a company called DCM Shriram, which I'm only sharing with you for academic purposes. And my cost of buying that stock was 56 odd rupees. The company has returned dividends on that stock in the last 10 years of almost close to 70 odd rupees, which basically means that every year my capital deployed, if it was 56 every year, suppose I got back 80 paisa, that is 0.8% dividend, then I got back maybe 1 rupee, then 2 rupees, then 4 rupees, then 8 rupees, etc. So my capital invested kept getting returned almost, and therefore, if that 56 rupees became in real term became even zero. In fact, not only became zero, I had 14 extra rupees in my pocket. Now, my question is that if I'm only looking at dividends, the question is that yet the dividend yield may have been very interesting for me because it may be fighting inflation, and at the same time there may be an asset increase, asset price increase. Here in this case means the share increase. And in the last few years, DCM Shriram went up to maybe some 11, 1200 rupees, 1200 rupees odd. I don't remember the exact price. And then it fell down to maybe some 800 rupees, but I did nothing. Because the reason for me to take action or to be supported by inaction is not a reflection of what the stock market does to a price. My action or inaction is going to be decided by what the management is doing. So, for example, if they are developing a facility or a capex in, say, in chloroalkyl or products, or for example, they are venturing out with Finesta, or for example, they are venturing out into DAP. DAP is basically fertilizers. Then my question is going to be, okay, let me see the management. Maybe it will work. After all, for all these years, they have done something interesting. The governance standards of the company have been good. They've been able to do think caustic soda. If they've been able to do certain things in a tough environment, then it's a competent management. But on the other hand, if you discover that no, despite all the good management, the company is, for example, stagnating because the policies are difficult, rural India may not be doing as good as urban India, international commodity prices may be of a concern, maybe people are not using Finesta as much as now other competition is coming in, because when Finesta was launched, the window panes that they were making were very unique. And so you just wait, because it's like you wait to see how rash the traffic is on the road before you decide whether you will drive fast or you will stop the car. And then even at that point of waiting, if you are getting rewarded because your capital now invested is very, very low, in my case zero, and suppose the company on zero is giving back 30 rupees dividend, then I'm actually increasing my returns many fold just by being there. But on the other hand, suppose at the click of a moment you get an opportunity that tells you that some other company is positioned exactly where DCM was positioned in 2013, which I don't mean that it has to be in the same sector, it could be in another sector, then basics of economics tells you that in life, money has an opportunity cost. And your objective is to put the money to the most optimum use. That most optimum use could be another company. It could even be an expenditure by you. For example, if there is a marriage in your home, or you want to renovate your home, or you want to do, pursue education, then the opportunity cost of that money is a desire to do something for the betterment of your own self. And if I find that the opportunity exists in another company like I did today, then I've exited that position and I've shared my experience just for the purpose of telling you. Sometimes by not doing anything, even in the boring sector, you can end up doing a 100x stock. So life is only about, and then somebody commented on that tweet saying, but you must be having several 100x. I said, but I also have duds, no? Because if I knew that every which stock is going to become 100x, I'll only have those 100x stocks and everything else will become redundant. But that's not how life is.
Right. So, sir, how do you view this the topic of portfolio churn in companies vis-a-vis long-term holding? Because the retail investor has a finite capital. So how should we approach like this kind of a thought process then? Because every company performs in a certain duration at its max, and very few end up turning like huge multi-baggers.
No, actually, a lot of stock turned to be multi-baggers. The reality is that a lot of investors who had bought into these stocks do not hold them up to the time of the journey. It is
Hmm.
in hindsight that you will today, for example, if you do a reverse calculation, you will find that there are a large number of stocks that have become multi-baggers. And you may be able to point fingers at some of them and say, but I've held them, I own them, and some part of their journey. but for reasons that only you can explain, you may have exited them at some point of time, and therefore your return may have been, limited to the kind of gains that you got. Maybe you even exited in a loss, and they ended up being, they ended up doing substantially well. And I find that one of the flaws that many investors have is that they are not able to condition their mind once they exit a stock to buy it again if they have a judgment that it is still doing well, just simply because the price is now higher than the price at which they sold. So, for example, if I bought a company and I sold it at 50 rupees, and thereafter the stock falls at 46, I feel very happy. I feel that I've sort of, sold it at 50 and it's fallen down, and how bravo, how well I've done. And that 46 then changes into 75. Then many people, the fixation is not whether it is 75, the fixation is what has caused it to go from 45 to 75. And if the thesis of that movement is essentially the fact that things have become better, the management has become more competent, the product has become more innovative, and therefore it has higher margins. Maybe the ability of the company to reduce the risk of one product and therefore have many products, and therefore to that extent show the ability to capture different segments of the market is improved. Maybe they've had a collaboration with somebody where that collaboration has changed the focus of what they're doing. And you've seen so many examples. Astral was an example of a company that benefited from a Lubrizol collaboration, and had Lubrizol not happened, Astral probably would have not reached where it was. So there could be many dynamics. Similarly, one of the catalysts could be the change in the management. And when I say change in management, it doesn't necessarily mean change in promoters. In fact, it is good that the promoters are not changing, and therefore they are attaching, substance to the fact that they're holding the company for many years. But the leader, you saw what Mr. Chandra did, for as an example, to the Tata group, and you've recently seen how Puneet Chatwal has been able to transform Indian hotels from to in fact it's now a zero debt company. So you have to also bet upon management changes. Sandeep Tandon has done that with ICICI in a very successful way. So there are many examples. I just say that whatever happens in the market, please try and educate yourself as a student to try and think that what could have worked for Astral, what could have worked for Pidilite, what could have worked for so many companies. I mean, there are EDCM, Shriram. I mean, how many people think of making a 100 bagger from a company essentially into fertilizers and caustic soda? So the question is, why would you have such a closed mindset? Don't you know now? If I open a debate in my mind and say, but Safir, you yourself had lost so much of money on Nagarjuna when you started, and that was a fertilizer company, and you know that so many fertilizer companies have not made money because of many factors. Then I'll tell myself, but maybe no Coromandel could have done well, and maybe something else could have done well, and therefore let me analyze what did they do differently. And if I find that the goings is supportive of facts and it is supportive of wealth creation, then there's a journey. So you once you get onto a journey, you can't be see, one of the biggest problems with investors today, and that includes mistakes that I also make, is that we are so fixated on what happens in terms of a news flash and a quarterly result. I feel it is ridiculous, absolutely ridiculous. Like, I'll give an example that in the last few years, I have not been positive on large IT companies, and I've been quite vocal to say that I own the mid IT companies. Yet, I find the television anchors are hell bent on saying that the results are bad, but the stock today, even from the dip, will go up. Why will it go up? You're just basically using a price fixation as an ego. In reality, you look at the company and see that when employment is suffering, when margins are suffering, when order intake is suffering, when companies such as ITC and Dabur are setting up their own IT divisions by recruiting people and saying we'll do it in house, then you're looking at a cardinal change in the way the industry functions. So don't ever force yourself to think that just because the thing happened in the past, it has to happen in the future. And similarly, for example, if such thing was bad in the past, it cannot get better in the future. You have to question yourself, and as you question yourself, you have to adapt to what kind of investor you are. Whether you are a momentum player, whether you are a long-term player, whether you are an SIP player, whether you are diversified, concentrated, and then whatever works for you, that is the best way to invest.
That's great. Thank you, sir.
Thank you, Shashank. So one audience, Darshan has a question. He is asking, sir, how does you read the railway infra companies currently? Should one be concerned about the cyclicality at this point? What's your, for example, today rights didn't show good numbers. Should one be cautious from here?
No, see, there is a difference when you perceive a sector, and there's a difference when you perceive a company, and there's a difference when you perceive the result of a company in only one quarter. Now, as an example, personally, I did not like the rights numbers, and I tweeted on this today. But generally, that does not mean that I don't like railway as a sector. There is a massive capex that is going on in the sector. We are very proud about the fact that new trains keep coming, and a lot of people are showing excitement, whether it is Vande Bharat train or it is the Rapid X train, which has been named now as Namo. And there is transformation happening in terms of the way tickets are booked and the way food is served. There's greater transparency. There's more comfort setting in. So, and people are enjoying rail journeys. Rail journeys are not meant only for the purpose of reaching from spot A to B in XYZ hours, but is also meant for social. A lot of people like to travel by train because it's a good experience. In a lot of foreign countries, when we travel to foreign countries, we ourselves like to travel in those trains because they are means of sightseeing and many other forms that you cannot see from a plane. So there is a completely different segment. The sector is doing exceptionally well. The sector does not seem to be showing any signs of slowdown. And some of the companies, for example, where I may have invested in the sector, their order intake has been good. Now, if a company that I've invested in, as an example, for a quarter comes out with bad numbers, I have to examine what is the reason for bad numbers. Now, just because one quarter something was 900 and another quarter it is 700 doesn't make it bad. That 900 could have been because they may have booked order the receipts, they may have booked their profits based upon receipt or payment, not based upon execution. So initially they may have incurred a lot of capex and eventually might have recovered that money. Their business model may be such. Similarly, for example, it may be impacted by certain one-offs. Those one-offs may be acquisitions, their one-offs may be incentives given to people, it may have been release of payments, it may have been delinquencies. For example, today's newspaper spoke about how the Tata Group is going to be getting a refund in Tata Motors along with interest. But the real question I would ask myself is that, and suppose I was to buy the stock only on that news, my real question is, in real life, how many people actually pay interest? It's a big thing if they recover, just the principal amount. And will they keep going on with an endless litigation because one party refuses in an appeal and a second appeal, etc.? Is a call that you take. So I don't get perturbed by by just a one-off result. Of course, in the case of certain companies, the valuations may be rich. I mean, if you're looking at a company in railways, for example, that is quoting way above its historical average, you don't have to be disturbed because historically the railway sector may not have got the kind of orders. But if it is quoting above its historical average and its growth rate is following, then it is a concern because then it means the valuations are getting more expensive and are not leaving any room for error. And the market always likes to penalize companies when they make errors.
Ron, you can unmute and ask a question, please.
Sure. Thanks, Prince, and thank you, Safi sir. Great learning from you over these last couple of years since I've been following you. Couple of questions. My first one was, what's that one principle or belief that you earlier had, but over the years with more experience, you've changed your view completely?
Yeah, see, one of the things that I would do more as an amateur investor, and I don't say that I am seasoned investor, I am still an amateur investor because I would like to learn and I would like to believe that I can get better. But one of the mistakes that I used to make earlier was that I would look at a certain stock and the drawdown of that stock or maybe the appreciation of the stock and get unduly excited. So, for example, if I had bought a stock at 100 rupees and on one particular day in the morning it opened at 130 rupees, I used to feel very elated. And similarly, if the stock fell from 100 to say 80, I would feel very bad. So, I realized that there is a complete folly in terms of looking at every single dot. If I was to call every stock a dot, to look at every single dot in the portfolio, and to say that I have to excel in every one of them is a it's an absolute mistake. So suppose I'll give an example that on one particular day, say some of my stocks that I really like are down. Suppose they're all down 2%, and at the portfolio level I'm down only 0.2%, and the market that day is down say 1.5%. So that means my most favored stocks are down 2%, which is more than the market of 1.5. But overall my portfolio is not impacted because something is stabilizing it, some unexpected stock has moved up, etc. So I've learned that over a period of time, that in order to do well in the market, you have to take a big picture sense of your portfolio rather than a case to case stock sense, because that movement of stocks is way more unpredictable, whereas the portfolio is way more predictable. Similarly, for example, if I am able over a period of time, like many investors tell you that you should not see your portfolios, etc. I'm not in that camp. I love to see my portfolio. I only like to tell myself, today I am doing slightly better than the market. And of course, there are days when the market does better than me. But as long as over a period of time, say for example, 365 days, I do better than the market in more than half the number of open days, and I would have over a period of time accumulated better returns than the market, and that itself will enrich me and encourage me and motivate me to support my next idea and my next investment. And if you are able to encourage and motivate yourself, you would have realized that patience becomes way easier because of conviction. And if patience becomes more easier, half the battle is won. Because then, if a stock falls, you do not look at the price, you look at the opportunity.
Wow. Just love that last statement. Thank you for that. So one very specific question, and probably I'm a little biased because I have a cat, and I'm aware that you have a dog. Do you see pet humanization is a mega trend that's shaping in India?
No, of course, yeah, it is. In fact, I have the glorious distinction of being a fool because in my office, I created this brand, Heads Up for Tail. It was coined by me. And when I was sitting with the entrepreneur's father, it never dawned to me in my mind that I should become an investor. I just, despite the fact that I saw opportunity, which is what I tell you. Like, if you even explore today, the pet segment is nowhere close to where it can get. I mean, it's very basic that you can get a cat and you can get a dog, or maybe you can get a bird. But what you can do with them is very basic. And, as more and more people adapt to it, whether in terms of vet care, whether in terms of, the kind of things that you can do with your pets, whether entertainment and many other things, then the opportunity will become many-fold. Now, the same thing happens in market. As an example, when people were getting too fixated on pharma, I used to own a lot of pharma companies. I actually sold those pharma companies to buy hospital stocks. And I remember that when I had come on ET Now and I spoke about, just as an example, for your purpose of learning, of buying a company called Max Hospitals at 90 rupees. I remember that Nikun Dalmi and Aisha Faredi asked me that why are you buying hospitals, because they did not have any history. And I used to say that I think preventive healthcare will become a big game changer. That means hospital will cause you to prevent disease rather than to just cure disease. Second part is that I had seen the success of ATMs in the banking, and how the banking sector had done exceptionally well because of the onset of ATMs. So I told myself that, in tier 2 and tier 3, where they don't have access to top doctors in the country, now they will be able to have access because of online, where the doctor will say, okay, I'll give you 15 minutes and I will come online and I will do a diagnosis of what is with you. Similarly, you can upload your medical reports on apps, you can upload your medical reports on web pages, and you will have consultancy from some of the bigger hospitals and bigger doctors. So it was a game changer. Then the entire preservation of medical history online itself was a game changer, because now you did not need papers that you lost, or handwritten prescriptions that sort of got torn over a period of time, etc. So the business of maintaining that information, and so it was connected in many ways. And I felt that will also basically mean that hospital technically will be setting up a unit through an ATM or an online access. When I say ATM, it doesn't mean an ATM machine, but only a computer through an online access, and therefore the capex, which is huge in case of hospitals, will get reduced. But effectively, you will say that now you have 24 reach points with customers. I mean, well, I mean, just imagine you take, say, for example, a place like Haldwani, and you say that all you need is a small area where you install a computer, literally like a, like we have internet cafes, and somebody goes there and he closes the door like he does in an ATM, and he can have a discussion with the doctor, which doesn't. So it's a big game changer. So you look at examples in one sector and correlate it to the other, like pet, you correlate it to something else, and you come and say, then what is the transformation. And then you have to be a believer, because believer basically means that you've identified an opportunity. Now you need to find companies. Those companies may be not be listed, so the opportunity may not be there for you. They may be listed, but they may not have the aggression, which means that you are therefore going to be stranded in a sector that will grow, but a leader that will sort of falter, or you could be in a situation where a company, instead of looking at the opportunity, which is so obvious before its eyes, decides to do obscure things, like instead of opening more and more of pet stores, decides to basically now experiment and say we will start sponsoring a football team. And you come and say, come on, what is the correlation of a football team sponsorship? While it may have a lot of view, it will also take away the entire cash, and you will have nothing left to open stores and nothing left to innovate products. Then you will realize that no, at the end of the day, it's a game of cash flows and incremental value, and not perceived value. This is, if you recall, in the internet, what we learned from the internet is, it is the initially people thought valuations come from eyeballs, and therefore initially websites that had a lot of traction sold at crazy sums of money, but eventually, so some of the websites don't even exist today.
Sure. Thank you so much, sir. Appreciate your answers. Thank you.
Yeah. So, Safir sir, as we progress as an investor, the nature of mistake changes, because when we start, the mistakes are different, and as we progress, the mistakes are different. So, any mistakes which come to your mind you want to share with us?
Sir, I'm working on a book, and once the book is out, it will share with you a lot of insights on the questions that you are asking. Having said that, I don't think that mistakes are a point of 1 to 10. You cannot say that I've reached level 10, and it is not like judo or karate, where you say that I've started with a white belt and I've now reached a black belt, and or a Six Sigma, where you say that I've sort of brought it. Mistakes will always happen, because by definition, we are all humans, and humans are all factors of mistakes. We No matter what we do, there will be too many factors that interfere with the rational decision making. For example, if we see in the market that certain sectors are doing well, we have the habit of latching on with the fear of missing out, as opposed to finding true value. And after some time, when the true value starts catching on, then we have the mistake of saying that, what is in vogue, for example, where we had the fear of missing out, crashes, we have the feeling that, oh, we will go back to Warren Buffett and we will reread Warren Buffett, and now we will be disciplined and we will not make mistakes. But we are bound to make mistakes. The only thing is that if you leave within your, like you in your portfolio, you can leave a margin of error. In life, you can leave a margin of error for some of the judgments that you will make. But that margin of error should not be of a kind that does not give you the ability to stand up and to sort of walk again. So, therefore, I always say that even when you buy a company, you should not buy a company outrightly as if this is ultimate and nothing else, because you could be wrong. In If you look at the journey of any investor, that for example, even if you look at the journey of Mr. Rakesh Jhunjhunwala, and you look at what kind of money he made from Titan or from Crystal, etc., you will see that during the journey he must have bought many times. And in that many times, if one return gave him 100 times, and the second return gave him 90 times, and the third return gave him 70 times, that's also a lot of money. So I've sort of realized this, and I'm trying to evolve it in my thinking. And of course, in times of good markets like we have right now, we don't end up, we don't sort of pay so much of attention to our mistakes because things are good. But the moment the market falls, so many people react. I mean, if you recall, I think it was on 2 Mondays before, about 2 weeks back, that single day the mid cap index fell some 3.5% odd, small cap index was down 3.5%, and most average portfolios may have been down 4%. So my broker told me, sir, bech rahe hain. And I was like shocked. I said, what is wrong with people? Because if you were to ask him क्यों बेच रहे हैं, so their answer is, most of the people's answer is, वो गिर गया, इसका डीएमए हो गया, उसका वो हो गया, ये ओवर वैल्यूड था, ये हो गया. एंड द रियल क्वेश्चन वाज नॉट दैट what has drastically changed. There is no catastrophe that has happened. Life does not end just without a reason. You have to have a heart collapse, you have to have a fall, you have to have a medical history, you, somebody will have to hit somebody by a car, there has to be some incident. It's not like there's a cause and effect. But if there is no cause and effect, then question to ask is, what is my horizon? So when I wrote that day as an example that I'm out to buy, somebody will say, but you know, what kind of investor are you? Why are you buying at just a fall of whatever 4 or 5%? My question is, my point is that in the last 1 month, some of the stocks may have fallen 10+%, depending on whatever stocks. Now you ask yourself, what is your horizon? So if I tell myself my horizon is at least till 2025 or till 2026, so my question is, can I buy those stocks until 2026, assuming inflation at 8%, beat 8% per annum? And if I say, okay, 1% is dividend within that, can I beat 7%? And I say, oh, I have reasonable belief that the stock may give me 20%. I've done enough. So that's how you have to program your mind to basically convince yourself. And of course, it can fall more. But then the gap between, so if you say I'm going to make 15% return or 20% return, you'll say now I can make 25% return.
Right, sir. So, is it fair to assume that you do not use technicals in your style of investing?
No, I don't. Never. Because, see, like I said, I'm not that I'm against anything, because somebody may walk up and say he's got great expertise. It is not my expertise to begin with. Second, it is not my interest. Third, it is not my time. I'm extremely busy as a person in my capacity of a lawyer, brand advisor, speaker. I do so many motivational talks. I'm doing strategies, etc. I can't sit before a screen throughout from 9:15 to 3:30 and examine graphs and write down their past patterns, etc. I don't have that much time. In fact, if I calculate generally that between 9 to 3, if I was to sit in front of a computer, which basically means 6 hours, as a professional, I'll do far better by avoiding that.
Right.
And next point is that I just tell myself that, you know, it's very unfair comment from me, but you know, but it is my comment, in the sense that my comment is, the same technical guy will say market is bullish just because the market will go up. Then the same technical guy will say it's bearish because it has fallen. He will say, I, for example, saw tweets the other day saying bank nifty returns for 2023 are now flat or have turned negative. Arey, but your question to ask yourself is that, why are you fixating banks is equal to bank nifty? In the same time, there are so many banks, private sector banks also. For example, Karnataka Bank has given massive returns during this point of time. Jammu and Kashmir Bank has gone up more than 3 times during this period of time. Why are you fixated on a nomenclature that is absolutely wrong, just because HDFC Bank and Kotak have not performed, and maybe ICICI has been stagnant during this time? The same ICICI has gone up 4x in the last 3 2 years. Why don't you see that point? Now, if you say that, oh, it has stagnated, suppose your logic is that they have stagnated and they can't grow. Well, that's a fair logic for you to exit, if you believe that.
Exactly, sir. So, Dr. Nikesh, you can unmute and ask your question, please.
Hey, is my voice is audible?
Yes.
Yeah. So thanks for coming to this space and finding time to share your insights. So I have like one personal question. So I see that you have really nice bibliography spanning over books and then publications. So maybe So I also come from I mean I'm from academia and now doing investing as my hobby. So maybe could you able to share some like why you do that and how it's helpful you, because I also wanted to continue to because I also do use my expertise of academia to like in investing. So I start writing about good companies and their good business model. I just started with one EV company. So this is my first question. My second question is that
No, so what is
about.
the question? Sorry, that what is the question?
So my question is that because I see that you have a very nice bibliography about publications and really, like, so how like what. I mean, how? What is the process? Why you do that, and how it's helpful to you, and and then how you get a time to it, and what is your motive for like creating such a broad broad publications list. So maybe could you share some of your
Nikesh, you are breaking in between. Sir, you got the question or
Yes, yes, I got the question, and I'll give you the answer. Like I said, there is an evolution of every single person and an evolution of every single investor. Now, in my career of studies, I realized that in the initial years of my studies, I was an average student. When I say average student, it didn't meant that I was nowhere in the top 10. And then drastically I changed, and I became in the top students. I obviously therefore did well in my boards, and then went to a very reputed college, and then did reasonably well in law. And then I did very well in my career. And I tried to put that entire thesis together and say that what is causing me, like as an example, I don't think I was as smart earlier than the kind of opinions I started giving later in my career professionally. And then I would ask myself that, but where did I get this knowledge? Where did I acquire this? So I realized that the basis of that knowledge was twofold. One was keeping reading everything without having a sort of a blockage and saying that no, I will not read. It could be legal, it could be an interiors magazine, it could be a food magazine, it could be a current affairs magazine, whatever I could read. Wherever I had drawbacks because I could not enjoy reading that, I would utilize that time in reading something else. And secondly, by making notes. So, for example, if I start reading today a book which is on medical science, and I discover that they're talking about something to do with the heart implants, or they're trying to do something with the enzyme behavior, and there are complex discussions of words that I do not understand, then I, instead of ignoring them, I write them down. And while I write them down, it may not be that after a certain point of time I'm able to recall them. I may need to revisit the notes, but a large part of what I've written will stay. So it's like saying that I did not remember a precise name of an airport in a city in India, but I knew everything else about the city, including what the airport looks like and what the roads are and where to stay and how the behavior of people, etc. So the rule of 80-20 applies there. The Pareto principle applies there. And what the other thing about writing is that writing puts you to an advantage of articulating thoughts, including thoughts where you may be weak. So, for example, if I have to write a book and I discover that I've hit a writer's block, and I'm not able to articulate my thoughts on that, then it will instantly awaken me and think that that is an area where I have to go and revisit my notes, restart, like we used to do preparations for our exams, etc. And that sort of enables you to become better. Now, I'll give you an example. When I do my strategy sessions, my investment talks, and also my legal talks, now I do not ever like to prepare my slides. My team will tell you that at any conference where I speak, even if you have 500 people or 600 or 1,000 people, or even on television, when television anchors tell me that tomorrow is your interview, would you like to discuss? I said, no, I'd not like to discuss. So they say, why? I said that now I have been able to read enough to be able to talk with my heart. And where I do not have the capability, suppose they ask me about a sector and I have no answer, or they ask me, then I say, I've taken down your point. I'm not well versed with this. I cannot answer this point, but I will be better prepared next time, or I will research on it and come back. And that's all fair in life. But I will not hazard a guess. So even on Twitter, If somebody asks me, there's so many people who ask me about companies of which I have no answers. I don't try and say, look, cool, wait, I will Google it and I'll tell you good or bad. I mean, I cannot understand how a person, as an example, can have comments on 7,000 companies. He will never be able to do justice. I can guarantee anybody who comments on every single company is clueless in life.
Right, sir.
Very, very well. Answered. I think. But just one questions about this investment. So similar to IT. I think you are also bullish in SMEs in general, and what you see EV sector as a like a kind of a sector in a trend, or you see that it has a lot of potential in transformation to energy space, and what some of the scripts, if like you see that has great potential in this area, if you can answer
No,
that.
on IT, I shared from my own behavior of the markets that I was an investor and I had made good returns in large IT companies. I had bought these IT companies recently when COVID had struck, because it was, to my mind, a no-brainer that if we work from home, we will have to develop a lot of IT capabilities, which will require not only software but also hardware. And therefore, I bought a basket of stocks. And there is no doubt that IT companies in India, the larger ones, are leaders and have been leaders for a while. But over a period of time, when the global economy started showing signs of slowdown, signs of cutting jobs, trying to not reinvent the wheel in terms of efficiency, but trying to really struggle to put their products out. If you look at a company that is that is struggling to sell its product, then it will not say that, I will just, because I'm struggling to sell my products, I need more IT, because there is a real world and there is a virtual world. Now, if you read retail trends around the world, a lot of people are coming back to physical shopping, and they're coming back to physical experiences such as travel and leisure and thing, as opposed to online. So if today, as an example, you tell me that you will create a apparatus for virtual travel, and you will show me through the virtual travel what Rome looks like or what London looks like, I'll say, but why? I want to go and experience it myself. Similarly, there's an onset of huge amount of technology in cars. In fact, many of the car companies say we are not car companies, we are technology companies. So their role has changed. With you feel so, when you transform like this, you come and say that, what can I buy in this sector where I feel that there could be a sustainable advantage at a time when the world is going through problems. Now, if you say that, for example, all cars in the world look alike, suppose you say all cars in the world look alike, then somebody will say no. In order to differentiate one car versus the other, we will have to create aesthetics. So certain cars have aesthetics which are very appealing. If you see a Ferrari on the road, or you see a Porsche on the road, or a Lamborghini on the road, you will stop and have a second look, because the look of the car appeals to you, the sound of the engine appeals to you, the aerodynamics, etc., appeal to you. So you say, okay, one element of differentiation is design. The second element is technology, because even when you see ads of, say, a Mahindra and Mahindra on an SUV, they are now trying to showcase to you what is inside the car and how technology integrates and how voice activated commands and many other things that may be pleasing to the buyers are at play. So you make a basket of stocks and say that, look, these stocks seem to have the going good for them vis-a-vis other stocks which are becoming more commoditized at right now. And I have therefore, to the best of my capabilities, bought in my portfolio for the last maybe 2 years a lot of these mid cap IT stocks at the cost of the large IT stocks, and thankfully have done well for myself within that decision. When it comes to EV, it is no brainer that EV will become the future. The tough decision is to pinpoint and say who's going to be the leader, because, as an example, one leader, when Tesla became a leader, it came from unexpected sources. Then all of a sudden you had a company in Malaysia, or I think Indonesia, I forgot where that company's origin is, and they became a leader. So the question is that, do you think the next leadership will come from a Toyota or it will come from Maruti? That's a very tough call. And when it becomes tough, you can either say that I will hedge my bets by betting on both. There are two only outcomes. That one outcome is 50% here and 50% there, and you bet on two outcomes. But in reality, you tell yourself that no, in a casino, they will never create a bet which is 50-50. So it will never be odd or even, it could also be zero. And zero may not be classified as odd or even. In some casinos, they will say that no, in order to reduce your probability, they have also created a double zero on the roulette table, as an example. Or they will not allow you to draw a card in blackjack after you've reached the number of 17, and above 21, you'll go bust. So you have to examine what is the probability that is against you, and then you come and say there is uncertainty. Now, within uncertainty, there has to be components, and this happened when there was gold mining that happened in California. Repeatedly, you will read that people kept buying mining companies, but the real money was made by people who were making the axes and the shovels, etc. So you come and say, I will discover, as an example, auto component companies that have to cater to this, and it is inevitable because they have created massive capacities and they have created the credibility. For example, there is something called a Deming certification, which tells you, talks about quality certification. So you'll say that this company has got the equivalent quality certification, it has credibility in terms of its processes, etc., and it is demonstrating that it is able to make EV products. And then you end up buying that, thinking that I will not like to bet whether Toyota is first or some other companies first, second, or third, or fourth, but I will bet that these guys are likely to come to the same vendors, and therefore they will win no matter what. And if you notice, actually, while a lot of media talks about the outperformance of the automobile sector, I am personally not convinced, because if you map the data, even if you take as an example, say a Maruti, and say that the stock has moved up from whatever 7,500 rupees to 10,000 rupees, and therefore it has moved up by 2,500 rupees on 7,500 rupees. In the same time, there may be companies in the auto ancillary sector which bare minimum have doubled, more than doubled in some cases also. So the question is, the sector has benefited more of the auto ank as opposed to the autos per se. And there I did not play so much on uncertainty. I'm not only talking about my portfolio, I'm saying as a thinker, I am not playing so much of an uncertainty. I don't care who's winning the media war. Like, it's like saying CNBC every day says I'm number one, then ET now says I'm number one, then another channel says I'm number one, Bloomberg says I'm number one, then Z says I'm number one. I'm not interested in who's number one. My question is, what hardware product do you need, like a decoder or anything else, in order to become number one? Then I realized that in order to succeed, the television channels require you to do an online payment. The online payment is done through fintechs. So why do I have to bet on Z versus CNBC versus ET now? I'd rather buy a fintech stock that enables me to recharge my account.
Right, sir. But sir, do you think the EV story has been discounted in the price already, or you still find the valuation comfort in certain
There is,
pockets?
see, that question is vague, because that is assuming that you have identified a stock. Like, how can EV be discounted? Because EV is not even anywhere close to 10% right now of the entire global automobile consumption. So if that 10 has to become 100 one day, obviously it can't be discounted. But is it discounted for company A vis-a-vis company B is a very different answer. And that company A versus company B, for example, suppose we are gung ho on, say, one or two companies in India, and we say these will become ultimate in EV. And what will happen tomorrow if all of a sudden you discover that a company like Toyota has announced a vehicle in that, or a company like Hyundai has done something, or Tesla has come to India? What will happen then? We'll have to change, re-examine, and we don't know the taste of people. It is like, when Hyundai launched its SUV, did you realize that the SUV will become a bestseller? Did we think that that will sort of impact the ability of Maruti in that segment? But this is what happens. So we cannot be so fixated on sure about what is happening vis-a-vis a company in a sector that is being disrupted by technology. It's different if the sector, like, if you ask me Unilever, and I say, but Unilever has not been threatened by technology. So I'll say, yes, it is much more stable company, and it's easier to predict whether Unilever will be there after a few years. But it's way more difficult to predict what will happen to a particular leader at the threat of technology and obsolescence both.
Fair point, sir. So, sir, one question is around the agrochemical and API chemical companies. So, the person is asking about your views around the sector.
No, but see, again, the question is very open ended. Like when you talk about a chemical company, it could be a specialty chemical, it could be a bulk chemical. If it is a specialty chemical, it could be catering to pharmaceuticals, it could be catering to agri-chemicals. If it is catering to agrochemical, the agrochemical sector is right now in a bashed up state. I mean, even if you see the results of a company like United Phosphorus that came out, I think yesterday or day before, they have lowered their guidance. Even after not being able to do well, even DCM Shriram results were not good this morning. And maybe there are so many agrochemical companies whose numbers are right now struggling. There may be other parts of the market where the sectors may have gone through a complete capex. For example, it could be a company in a mines that has gone through a lot of capex, and now it may be at the virtue of a sort of a stability when it comes to the end product prices. But the question is, will you look at a drawdown in a script and a non-performing script? It may be non-performing maybe for 6 more months. So what will you do then if the suppose the market goes up 15% and you do zero? How many people will actually have the ability the day they find another stock they will say, this guy is not doing well, sell it, he's got, he's the bad boy in my portfolio. But that's not how investing is to be done, because that is why I
Right,
precisely I
sir.
told why I told you that many stocks will end up being multi-baggers. The problem is nobody will own them.
Agree, sir. And one question is around explosive making companies. Do you track any, without naming the company, the person is asking about any view on those companies, sir?
Explosives are doing well simply because the entire segmentation around both mining and defense is doing well. Now, India is talking about getting certain radars also for its safety, which are completely revolutionary. And in order to place those, the bunkers, whether it is making of a bunker or whether it is sort of a creation of a road, explosives are used even in infrastructure in a big way. So the question is, yes, it is an opportunity. The question, but don't forget that the buyer in his opportunity is the government. And if the pricing is too high, the government will not allow you to remain at that high pricing, and which means margins, high margins, because then they will say, look, this is a commoditized business. It is not as if it is here. The know-how does not lie in unique explosives. Some of the explosives are very basic explosives. So today you may be having that ability because of say TNT and other things that go into those explosives, as an example. But if you are not able to cater, they will float tenders, and in the tenders they'll allow participation, because for example they will tell a Larsen and Tubro that, why are you buying explosives from XYZ Indian company, the margins are 40%, why can't you buy it from overseas? Still it will be perceived to be an Indian buy because it will be routed through Larsen and Tubro, and it is not going to be a national security threat because Larsen and Tubro is not going to go and tell the world where we are going to use the explosives. After all, they're not being used for security concern, they're being used for infrastructure.
Right, sir. And sir, like as far as post portfolio is concerned, so when we deploy our incremental cash, so obviously the position sizing in companies get disturbed at times if we don't have any plan in place. So how you go about doing that if you were to make some incremental investments?
No, first of all, whatever incremental investments I make do not disturb my portfolio allocation, because the incremental money is being made at a discretionary level. I am choosing what I am willing to buy, correct? And if I, for example, if a company A in my portfolio is at 10%, and I'm choosing to buy company B, it means that I do not value company A to be more than a 10% of my portfolio. I am, first of all, in assuming the fact that we have graded certain companies in a portfolio as 1, 2, 3, 4, 5, we have already made the mistake, because it is impossible to say that the 11th company in the portfolio will not become your number one star and the 12th will not become number two, or things like that. It is impossible. Second point is that when I'm doing a incremental buying, I'm exploring a new option. That new option may turn out to be my biggest winner. it will give me a lot of time in its duration. Whenever a company has undergone a transformation, it has given you ample opportunity. It is, I'll give an example. Say, let's take an example that in the past several years, suppose I owned a company called Avanti, and Avanti became a multi-bagger, as an example. Avanti also gave me many opportunities to disbelieve itself. No, but the aqua sector has a checkered past. There are problems that happen with diseases. Shrimps have a problem because of many other control reasons. It is a cash model, and therefore I'm not sure what it means. There'll be many reasons, but as the journey gets more and more clear and less fuzzy, it will give you many times to buy it. So, like I just told you the example of Mr. Junjanwala and said that if something became 100x and something became 19, 17, 60, 50, 10x, 5x, even that was a lot of return. So you'll have multiple chance. And Mr. Samir Oda, as an example, talks about this all the time. He says that HDFC Bank has been a 500 bagger for him. But he says that he buys HDFC Bank every year. And in maybe 10 years back, what he would have bought, maybe that's also become a 10 bagger. I don't know what is the return of that, but I'm just giving an example. So you don't disturb anything. You should not be fixated on this question of whether it will disturb allocation. You should be fixated on the question that is the incremental money going to be my best return vis-a-vis inflation and risk management.
Right, sir. So one question is around the QSR space and how you see the future and at present, if one has to consider, so do you think this space as investable, sir?
No, I don't personally, and again, I could be absolutely wrong, and I can give my rationale for it. I am not a believer in the fact that the QSR segment, as comes out in many reports, is growing exponentially. First of all, it is a sector where there is a lot of competition. As an example, many people now wake up in the morning and they decide whether they're going to have a South Indian breakfast, or they're going to have a parantha breakfast, or they're going to have a bun, or they're going to have fruits, or they're going to have muesli, or they're going to have millets. There's so many choices. Second point, and therefore same thing is happening in the restaurant segment. There are too many choices. When I sit in my own car and I go on the highway, initially I would say that I would like to stop at a particular outlet because it's convenient, whether it is an outlet that serves a burger or a pizza or XYZ. But today I tell myself, no, I've got many choices. The other outlets were not known to me because they were not available, for example, on internet. I could not search them, but now they're available. When they're available, they have photos, they have menus, they have reviews, they have pricing, they have locations, they have many other factors that enable me to make a better choice, and therefore I feel the competition level has intensified. That is one of the reasons why I have owned fintech companies that are providing this information rather than serving rather than being QSR. Because now what happens is, inevitably, even if I change the restaurant every single day, I'm still able to go and order food of different kind: lunch, breakfast, dinner, snack, tea, anything. But I have to go back to the same platform. And even if they're charging me a small fee, which is a platform fee of 3 rupees, or they're charging, say, a X percentage from the restaurant, or Y amount for packaging and delivery, actually it is way lesser a cost than my ability to send somebody to that restaurant and get that food within that time. It will take double the time because my driver will go, he will wait for the order, he may misplace the order, then he will come back. When he goes there, it will not be the same sort of system where I can monitor. I have to call him many times, which means it will disturb my time. If I've got guests at home, I'll keep saying kahan reh gaye, come quickly, this, that, etc., etc. So the accuracy of the time, the convenience of picking different things from different locations, the advantage of multiple cuisines, the advantage of being able to get rewards because of delay in time, etc., which was the model that worked beautifully in the past for Domino's Pizza when they created that entire 30-minute rule. That 30-minute rule is being severely challenged today by some of these apps, because so many other people, I mean, right now, while I'm talking to you, if I'm feeling hungry, I can, simultaneously talking to you, explore an app and say, okay, what's closest to me, what will it deliver?
Exactly, sir. And sir, the pipe companies of the likes of Venus, Jindal, Good Luck, basically the infra play are doing good. So, do you think these stories will continue to do good as we will be, as the economy will grow? Then there would be more focus on the infra.
Yes, I assume that the sector should do well, but I would never assume that a company in a sector that is valued at way higher than historical returns. Some of these companies are now valued at 50 times earnings. Now, at the end of the day, a pipe is not a business which is so scientific in its approach that you cannot have competition. After all, there are at least about 10 leading pipe companies in the country. So it's only a question right now of capacity. Somebody's strong in north, somebody's got a particular size, somebody's got a ductile strength, somebody's, they're different features. But at the end of the day, capacity does come up. It is like what happens exactly with tiles and what happened with cement and many other things. So I will, while I like this sector and I may own a few companies in the sector, I will not jump and say that just because the company's results were good, I will ignore that 50 times, 55 times and buy it.
Right, sir. And even in the mining sector, sir, the companies of the like of GMDC, IMCO, Elecon are doing good. So, are you tracking this sector and have any view over it?
Of course, I see. Like I told you, if we become people with closed minds, we will not be good investors. So I don't want to close my mind to a sector, for example, mining, or for example, commodities. But the question is, I may not have the capability to time it to well, and if I buy it and I do not have the ability to understand the cycle, then I may end up buying a good company but still getting no returns. So as an example, suppose that is the case. Like take an example that suppose I own a company that is into, say, pellets. Now when I own a company into pellets, it is easier for me to think that is there a value added product being created which may have a higher margin? Is it that there is a creation of a brand? Is it that there is a creation of a pan India distribution network? Is it that the utility of those products are going up? Those are easier things. But there are other people, which is not me, who have greater competence in terms of picking up cycles, commodity cycles, and they do exceptionally well. But I don't claim to be that because I don't have that skill. Like, I'll give you an example. I own a cement company. Now my bet is that not on what is the price of cement. My bet is that they are continuously increasing their capacity and becoming bigger and better, and the brand is bigger and better. And the ability of the entrepreneur is not defocused. It's not like he's sort of moving in from one to another. Neither is he jumping in and saying, oh, just because another company is for sale, I have to buy it because I want to put everything back into my car, even if that looks like a mess. No, they're focused on what they do well. Now, if that company, let's take an example, the company's results don't come out well. Now you will look at the result and say, oh, but they have shown uh, a beta drop, or they have shown something, but you will ignore the fact that during the same time they have built capacities. Now, I'm not trying to talk about replacement value because that's a concept that is very difficult for somebody who's not an expert into commodities to understand. But I'll come and say it is, at the end of the day, cement is becoming a consolidation game now.
Right, sir. So, if I were to ask, sir, which sector you are overweight as far as your portfolio is concerned, I mean, the highest allocation, if you would like to tell.
See, highest allocation in my portfolio will be script wise. I'm not the kind of person, and like I said, does not mean that others can't do it better than me, but I'm not the kind of person who will say, as an example, that I must have a 10% exposure because you asked this question of to pipes. As an example, suppose I say pipes is a good sector. I will not like to say that I would like to have a 10% exposure to pipes. I would rather say that I will own XYZ company and have an exposure. And if that company does well over a period of time, then I will maintain that exposure. And if the stock price does well, the exposure will keep increasing. But that increase in the, see, suppose your portfolio, as an example, is worth 1 lakh rupees. I'm just giving you an example. And you own a pipe company which is worth, for example, 5% of that value. So it is 5% of your portfolio. Now that 5% goes up in price and it becomes 8%. But that is assuming the rest of the portfolio is not moved up. That's also assuming the fact that you don't have a fresh 1 lakh rupees to invest. So that those dynamics continuously change, and I allow the dynamism of the capital inflows and the dynamism of flexibility of thought not to sort of restrict me. But at the same time, if for example on a particular day I find that that 5% stock itself will become attractive, like I just gave an example that 2 Mondays back, some of the market stocks had fallen to levels. I'll give you an example. I will not name a company on that. On last 2 Mondays back, one particular stock from the fall closed about 21% above towards the end. Now that's brutal, and it's a good company. So the question is that you take a script down 10% and then you take it up 10% and then you come and say, so my question is, I have to look at that company that day and say, what is the problem? So problem number one could be that some institution may be offloading. That's the institution call. Problem number two could be there's no liquidity. So there's no liquidity in just a volume of say 15,000 shares, which may be not even equivalent to a market cap of, I mean, suppose that is not even 1% of the company's equity. That's not even equivalent to say a market cap of say 100 crores, or even less than that. You come and say, the market cap has fallen for the company by 500 crores because just somebody just came and sold 5,000 shares because there was some mark to market pressure, expiry. Like for example, today itself, I'll just give an example. I don't do technicals and I don't do trading, but today itself, in the last few minutes, because there was expiry of Bank Nifty, everything in Bank Nifty turned around as if, all of a sudden. So my point is that, small changes and small returns over the market over a long term period make a huge difference to portfolio returns. And my fixation is on finding companies, and if that company happens to be in a certain percentage in my portfolio, well and good. If it is under, for example, I may have bought a good company, the price may have gone up, my allocation may remain at a small level, then I will follow the wait and watch period to buy it, which basically means either I will buy it at a price correction, or I will buy it because the fundamentals have got even better, then I'll buy it even at a higher price.
Right, sir. So, Ramanjeet, please unmute and ask your question.
Yeah, thanks, Prince. Hi, Safir. So this is a bit of a longish question. What's happening in the energy sector, not just in India but also in US? Uh, I see that the two things. One is that we are moving towards non-renewable. There is a huge thrust, not just thrust, but it's almost in desperation that because of climate we have to move through to non-renewable sources. Sorry, to renewable sources, and that is actually triggering a far greater demand even for renewable. We need power for electric vehicles, etc. And the grids, for example, they need to be equipped to take renewable sources of energy also into them. um, and I read news about US that how their grids are old and they need to be refurbished, they need to be reconfigured for the new energy sources. uh, so transmission, transformation, transformers, energy storages, there's a lot of moving parts in this entire ecosystem. So if I could request you, how do you see this entire, I can't even call it a sector, it's much beyond a sector, but how do you see this whole ecosystem evolving, and where do you see the initial investing opportunities?
See, like I explained to you in the context of e-vehicles or EV vehicles, the sector holds a lot of promise. It is at the same time, I would like to believe the fact that it is almost impossible for my capabilities, as opposed to, for example, somebody who's deep rooted into thesis on renewable energy. It is beyond my capabilities to pinpoint and say who exactly is going to be the winner. And whenever I have faced a dilemma in my investment journey of liking a sector but finding it difficult to pinpoint a finger and say A over B and B over C, I usually create a basket. Now, I will narrate to you as an example and for the benefit of many of
This space was downloaded via spacesdown.com. Visit to download your spaces today.
our listeners an example of the past. I was one of the first investors in a company called Sangam Renewables. In fact, my name was in their annual report as the leading shareholder, and it came in block deals. And when I would tell my friends that this entire company can do wonders, most people would come back with very logical answers to come and say that just a matter of a few years back, Moser Bear had collapsed, and the entire business of Mozambique collapsed because of getting into a commoditized business vis-a-vis their CDs and the threat that Taiwan brought in, and then photovoltaic cells, which was essentially at one point of time people felt solar power will do very well, and solar prices collapsed all over the world. And these are very high capex businesses, which basically means that if there's a collapse in the prices, and what has happened to Reliance Power, and you knew that there were deals being done at 4.2 rupees price vis-a-vis, and people were selling project reports even before without commissioning plants. So when you are we're obvious of the history, you will say, look, I don't know, but I will buy some, and I will probably buy others as well in order to mitigate if I find the reason. Or, as an example, one of the reasons why I bought Sangam at that point of time was that Sangam was part of what was called as the Wari Group. The Wari Group was a world leader. It was a very, very large group which was about to commit to substantial investments within India. The size of their investments in India made you believe that somebody who's pouring thousands of crores into a venture will not sort of ignore the fact that the market cap of what was listed was not even worth 500 crores, as an example. And therefore there was a great opportunity, and you will go by the wisdom of their experience in many countries to assume that they will not blow it all up. Now, having bought Vari and becoming one of the principal early shareholders, etc., as soon as the stock went up, I ran away from the company with maybe 2 or 3 times return. I ran away because I did not have the complacency at that point of time, nor the competence to sort of go and visit and start mapping what was happening on the ground level. A friend of mine to whom I had suggested the idea, the stock when it went up 3 times, I told him I'm exiting. He initially was very reluctant to buy the stock at the 18 rupee price. But when I told him I'm exiting and all, he said, no, but I will wait. I will go and visit their plants. I will find out what is happening, what is the government policy, etc. The stock subsequently corrected from that price to a price of 9 rupees. And I called him, and I literally at the point of saying, look, I did not want to feel guilty, and you should have exited. After all, you bought the stock only on my saying. He said, no, you're wrong. I'm trying to understand the sector. The price is not so important. My position size is also not so critical that it will hurt me and it will dent me, but I like to understand the transformation. It did not encourage me, motivate me to do the hard work to find out the transformation in the sector. The stock then went from 9 rupees to whatever is the current market price. It must have become now almost more than 200 bagger, 300 bagger. And may have missed out substantial part of the run until I re-entered the stock at a substantially higher price, only to educate myself that the price at which you buy a particular stock at the start of a sectorial bull run or a transformation in a sector. If I mean, as an example, had you bought Tesla at a price of $10, $20, $30, you have a lot of comfort because you're not going to lose much of money. And even if you stay put and do not experiment in terms of finding the next and the next and the next, you couldn't be adequately rewarded. But if you are entering at a time when the sector valuations have got discovered and people are talking a lot about how big the sector is, you will inevitably end up paying a very fancy price for whatever you buy at the threat of technology, and the technology becoming obsolete, and secondly overlooking the fact that if at any point of time the pricing of these sources of energy goes up many fold, it disturbs the entire dynamics of inflation and the entire dynamics of cost saving and incentives, and then creates disincentives where people will find a reason not to own it. For example, if you could be environment conscious and say, look, I'm buying renewable energy and people have bought, but at the same time, some of our friends in Parag Parik bought an unprecedented amount of coal India, and everybody felt that, look, what is wrong with them? Why are they buying coal India? They probably, it's the number one holding, and you can see that they made a lot of money, whereas you all know that coal creates a lot of pollution. So I'm saying that where you don't have the ability to excel, you have to basically become a sort of a. It's like, sweet. You have a sweet tooth, but you should not eat too much of sweet. And if you eat sweet, you should exercise.
So any follow up, Ramanjit, or shall we move on?
You've got some very good other
Yeah,
people joining in here.
yeah, yeah, I do. So therefore, Safir, if I could, maybe they seem like two questions, but they're actually one. One is that this disruption which currently the battery manufacturers in India are facing, and they are gearing up with huge investments. How should we see? How should we view these companies? Because this is the first time they would have seen such existential disruption. From
Over a period of
batteries, we
time,
have
my answer is
lithium. We do not have the raw material available. That has to be imported. And in a high interest environment, they are going into huge capex. And second was, so the conventional source of energy. We see that, I don't want to name, but a PSU is able to buy thermal plants at a competitive price. It has funds available at a lower interest rates, and also is moving towards green energy through a separate division, a subsidiary. So these two scenarios, I just want, how do you look at these things which are still
No, but
unfolding
your
and we're not
question is
sure how they will end up?
your question
Thanks.
is almost similar to your previous question, because like I told you, some of these things are discovered over time, and when you are uncertain, you have to play it with a initially with a low stake. I mean, I always say this, that I don't know why, as an example, if somebody is to buy a stock
Now,
at 100
Prince,
rupees
was I?
I, I don't understand, if somebody was to buy a stock at say 100 rupees and it goes to 200 and goes to 300 and 400, and the
Prince, was
conviction
I
is
audible?
getting more and
Was my
more clear.
question audible?
Yeah, it was audible, and sir is answering. I think you are not able to hear that. Please listen that over in the recording. Sir is answering.
So my point there is that when you are betting on uncertain events, then you will have to bet with an amount of capital that you can afford to lose. And as this uncertainty starts converting into more certainty, and please factor in your mind and in your investment decision that more certainty does not mean necessarily that that certainty has to come at a valuation discomfort. I mean, there can be a phase where you think that thing, for example, when Infosys was discovered and it had crossed the 100 p mark, still people used to believe that even at 100 p Infosys can grow more than 100 times, which was not a correct position to be in. And then there was a very long period of sustained period of underperformance by Infosys, and many of the early investors regret the fact that they did not exist. I mean, I remember just about a few days back at the CFA Institute, one of the first investors of Infosys, Mr. Sanjoy Bhattacharya, was saying that he made the foolish decision. He was calling it, I don't call it that, but he used this word of sticking on to Infosys even after it had, become a multi bagger for him, 100 bagger or whatever, because he believed that 100 P was sustainable. So valuations are always critical and sacrosanct in your entire decision. And same time, you cannot have a portfolio exposure to an uncertain sector that goes like crazy. So sometimes you have to buy more predictable, boring companies just to be insulated from the fact that these uncertain companies, even though this shows scorching growth, sometimes will really come to hit you hard. If when they correct, they can collapse, and they can, please do this academic exercise. Please do a Google search of the number of institutions that own Mozambique, and please do a search of how many recommendations there were on that company, thinking that it will become the ultimate source of what everything else. How many people have in the past lost burned their hands in Suzlon. Yet I am currently an investor in Suzlon. So my question is that if I buy a stock, and as an example, and I'm not recommending it to anybody, at a price where I believe that I don't have much to lose, and even if I lose that money, it's not going to kill me. but I do, then it's a very different thing. But now if you tell me that Suzlon is quoting at 300 rupees and it is quoting at now at a price to earning of 300 times because it is the ultimate answer and wind energy has been cracked and state legislations have come in and megawatts have been done, I'll also laugh and say, what we learn from history is that we don't learn from history.
Agree in total self. So valid points you just made. So Gurmeet sir has also joined us. Gurmeet sir, any comments to make on the ongoing discussion, or maybe any question to Safir sir?
Yeah, thanks, Prince. I'm actually in transit. Hope I'm audible.
Yes, yes, you are, sir.
Yeah. No, so I think Safir Bhai is not only a brilliant stock picker, I think he's very efficient in allocation and rotation of capital, and I think that's the reason he commands a lot of respect and has created wealth for himself. Uh, See, I agree to him to a large extent. A lot of us have not seen high interest rates for longer. I mean, last year, my career used to high growth, high premium companies, did well because that was confined to, limited number of stocks. And, because the discounting rate was so low, you could have given an Asian Paints, let's say 70p, and, the stock would have still done well. Again, more due to P re-rating rather than, the EPS growth. Times have changed, and it's not that Asian Paints is a bad company or Pidilite is a bad company, or so I have very old investments in them, and one drawback with me is probably I don't churn the portfolio as much. I'm very lazy there. But incrementally, when you want to add a capital, you have to be very mindful of that the risk-free rate now is 5% in dollar terms and about 8% in India. So you have to all take into this account that you will make 8% irrespective. In fact, you'll make more because you are at the peak of the interest rate cycle. So even if you buy a bond today, just a simple 10-year bond, and you can just withstand some short-term volatility, our bond is going to get included in the global bond index. You make 10, 12% even in a now. So your incremental capital that I make more than the risk-free return. This is something we will learn. Market teaches you. There are different phases of market. Up with something just because you like. So while you want to still hold company for very long periods, for wealth, but it's very important to keep evaluating it, very regularly. And I think one thing which Safir made a very good point is of we not learning much from history is that every 10 years, there is a big theme or couple of themes which gain prominence. So in 90s when reform happened, it was the ACC and the Tata Steels of the world, right? Which led it. 2003-7 was again infrastructure, maybe bit of banks. Uh, Last decade was largely technology. Now, if you see financial ka weightage in Nifty is about 36%. Now, I don't see this weightage remaining 36% for next 10 years, although I'm very, very, very gung-ho on financial inclusion in India. So whenever, this in next 7 years, our economy will add $3.5-4 trillion, our market will add $3.5-4 trillion. But all you need to figure out is where this will get added disproportionately. Now, can it be manufacturing? Probably yes. Within manufacturing, what will be the sub-segments? I think there you probably have to research hard. Is India in an investment cycle? Yes, I think I firmly believe I've been tweeting about it, saying about it, because I travel a lot and I keep meeting small MSMEs, SME promoters. और सबके पास काम है. You speak to a forging guy, his hands are full. You speak to a textile guy in Ludhiana, he will tell you how things are recovering. You speak to a specialty steel guy, he will tell you because these are our clients also on the wealth side. And we've been with them for last 10-15 years in terms of managing their money, so you can feel that, right? And you have to be on the ground to feel it, although the numbers are also showing it to a large extent, but when you meet them on the ground, it corroborates. It's not comprehensively across sectors, but it's starting to show in lot of pockets. So I think the next thing you need to now do is that believe that we are going to add $4 trillion of market cap in next 7-8 years, which is equal to what we have added in last 60-65 years. And can I get 2-3 very macro themes right? And within that, can I make lesser mistakes? I think rest the market will do for you. And then, I've been making this point. The other point, a lot of us are missing out in India, especially, is that there is this ownership change which is happening at the level. I think the way ownership is being reclaimed by DIIs, retail, HNI from other investors, I think is a very very we keep just dismissing. I remember I was mocked at when I said first time the SIP book crossed $1 billion, and I said this will be $3-4 billion. I was heavily trolled, right? That let the correction happen, see how the SIP book will drop. And as we speak, we are at $2 billion, and I'm telling you, Prince, right now, that by 27, 28, this will be $4-5 billion, right? It will be so this is a very very different market, where and people will keep complaining, कि ये तो liquidity driven hai, or all, and you will get sharp corrections in between. Corrections are integral, in fact very healthy, right? And so I think what you should be now doing is that just rebalance your asset allocation a little bit, cut the risk in the portfolio a little bit, uh, because interest rates are high and probably are going to remain high for some time. Just rebalance it a little bit. I think what you probably need to do and learn better is also in between, rebalancing that. And I think that's where you should focus on.
Great. Thanks. Thank you for your input, sir. So, Babulal, sir, you can ask your question to Safi, sir.
Good evening, Safir sir. My question is on how do you play the disruption themes? Because the technology disruption the leaders do not last long. Many leaders do not, some do. So how do you play the disruption play?
Good evening, sir. I'll
Good
answer
evening.
your question, but one word I would like to share for our host today is that a lot of people have repeatedly texted me slash direct message me slash tweeted to say that they continue to face audio issues. There are more than 200 people who have probably sent such messages. So, of course, you can play recordings of it later, but next time when we do a session, let's try and see whether we have a better uh, sort of a platform, because when I've done my Twitter Spaces talks with some of the other hosts, I've not had this sort of a complaint. So it's obviously, and Ravi is also online, and Ravi does talks very frequently where we have a lot of speakers and we don't have this problem. So maybe we should explore. Maybe one of us is using a device which is not conducive, and we can discover and perhaps be of enriched experience of some of our listeners. Now, Babulalji, to answer your question on disruption, uh, I am completely a believer in the fact that companies do not self-sustain themselves beyond a certain period of time. It does not come in from just the fact of history and the replacement of several companies. For example, in the Standard and Poor 500, it comes from a lot of studies that were done by people like Jim Collins, a lot of studies that have happened in India. Some of the companies that were dominating leaders in segments have lost their edge in those particular segments to be threatened. Some of them continue to be volume players but have been impacted in terms of stagnation, in terms of growth, by registering anemic growth. And over a period of time, what was 100 times discounting, 80 times, 60 times, 50 times, 40 times, 30 times, 20 times has sort of come down and impacted the ability of those companies to return anything meaningful to their stakeholders. Now, being versed with the belief that companies may not last forever, one of the best way that I play this theme is obviously by diversification to begin with, which basically means that I do not like to place concentrated bets on certain companies and by taking them as inevitable leaders, because I believe that the leadership will always be threatened. The second thing that I do is that like I told you at the start of my talk itself, I do not have a fixed state of mind. If you ask me right now to name the 10 companies that will be leaders And if I honestly tell you that I can name those 10 companies with conviction, then I am very convinced that about my lack of conviction than conviction, because that means that I know things about those companies that the companies themselves don't know. Yeah, some of the, if you read books such as the one written by Mr. Andy Grove, when he founded Intel, and he spoke about how only the paranoid survive. The paranoid always look at opportunities of evolving. I still remember Mr. Uday Kotak had made statements where he said that there are nights when he goes to sleep and he thinks that in the morning will he still be a bank, because he's not very sure of what kind of disruption will hit. Now, in that frame of mind, what you basically do is you evolve a diversified portfolio, but you don't have to cut down on the longevity of hold forever. For example, if you tell me that in my portfolio would I like to own a company for the next 10 years, I could give you a theoretical answer saying that I would like to, but it is not for granted that I will, because if that company goes through periods of long stagnation or disruption, then I would not like to lose the opportunity of a few years. And I don't mean trading, but I of a few years of basically being invested in zero returns. As there are many examples of this before us right now. If you look at, for example, the disruption in large IT versus mid cap IT, the actual difference to your portfolio if you had switched from large IT to mid cap IT could be close to the tune of 100%. If you had switched from some of the large private banks into some of the PSU banks, or even some of the private banks like a bank of like a Karnataka bank, or bank Jammu and Kashmir bank, the difference in your portfolio could be the tune of 300%. So the question is that I'm a karta of my portfolio, and my job is to do the best. At the same point of time, if I reach a situation where, as an example, a leading bank or a leading IT company comes to 15 times discounting, and the cash in the balance sheet is very healthy, and the management seems to be meeting more frequently to discuss how they're going to transform the business rather than not, then I may be inclined to believe that the price that I will pay for those business will be is relatively cheaper vis-a-vis the currency that I will sell through the stock that may be inflated at that point of time, to arrive at a more optimal balance to my portfolio. For those of you who are not well conversed with what I'm talking, or maybe if it sounds a little more difficult, please read about how the number one CEO in the world was a man called Henry Teledyne, and how he used stocks to his advantage in higher markets to sell more expensive stocks, and in lower markets to do buybacks.
Thank you, sir. Thank you for your insight. May I ask question about hydrogen play? What every small company and big company talking about?
Sorry, sir. What hydrogen?
May hydrogen play? May I ask you about hydrogen? There are some SMEs. They are putting the name hydrogen into their possible ventures, and there is a big name Reliance and everybody, green ammonia company. They also want to make hydrogen. So, what scale will get benefited?
Sir, I won't know, because see, that is the other thing, that what I don't know, I will not like to hazard a guess. It's like I will strain my brain if I try to answer on something that I don't know. And secondly, if I give you an answer and after 10 minutes of disconnecting the call, I discover that there was a certain point that I did not put across, then I will feel the guilt of not telling you, but be better informed by the discoveries. Now, the problem in things like hydrogen is that we are betting on uncertain events. Now, I do not know. I know the fact that there are car companies that are working on hydrogen. I know that there is a need of hydrogen as an alternate source of power, etc. But I will not be able to hazard a guess. In contrast to this, what I will do is that either I will have to look at a model that exists somewhere in the world that has succeeded. And at the start of this call, I told give you an example of how telecom had succeeded in, for example, for Singapore Telecom, that could have prompted you to own Bharti in the initial days, or how, for example, the public sector was losing out to private sector, and you could have bought banks in India, because the banks in US had done, all the Goldman Sachs, JP Morgan, and all these guys had done exceptionally well. Similarly, for example, today you may look at renewable energy and say that as a sector it is very small, and therefore it is inevitable that the sector will grow many-fold, but it will become difficult for you. In fact, some of the companies in the sector may have not even come for IPOs right now, and they may actually be the top leader. So again, it's a basket theory, but when it comes to something where you do not have, at least I don't have the competence or ability to sort of put a finger down and to say what I will do, I would rather wait. And it is sometimes better to buy on a more certainty, even if the stock price moves up, than to buy at a low certainty just because the stock price is down, or because some newspapers are going gallivanting, or media is gallivanting on the opportunity in a sector. See, opportunity in a sector does not mean that your company has to do well. That's a big difference that many people do not understand.
Sir, thank you. This is really nice insight. One more last question. Can I ask?
Yes, sir, sure.
Yeah, this is regarding pumped hydroelectric power station versus grid power storage batteries, large batteries for storing power from the grid, when it is available, no, not usable, and versus battery versus the pumped hydroelectric power station, which I think Naviali is doing the project now. NLC is doing project.
No, again, sir, we are going into the realm of what is not certain. It is literally like saying, that I'm not the person who's done a thesis on this to be able to comment upon certainty. And even assuming the fact, see, sometimes what happens is that you can be an industry leader. I'll give you an example from the consumer perspective. Hindustan Unilever is a consumer leader, but the task of Hindustan Lever to grow is way more difficult than the task of a new consumer company, simply because Hindustan Lever, in its existing growth and the size that it has reached, has already maximized what is called as efficiency. Now, when they have also, in the process of becoming better and better, trained a lot of people within their ecosystem to leave and to become the CEOs of competing companies and to sort of master that. When they have supported, for example, manufacturing through smaller scale units, then because of the scalability, they have caused the small scale units to become bigger and to become standalone providers. So what I'm trying to explain to you, as the big gets bigger, it also creates problems of being able to remain at the top. And in that scenario, it is way easier to then look at basics of accounting, basics of returns, basics of product destruction, basics of valuations, rather than to believe the fact that it has to keep getting bigger and better. I mean, if, as you will know, it is literally equivalent to that, that story where one person had a grain of rice on a chessboard, and then he put 2 grains of rice, and then he put 4 grains of rice and 8 grains of rice, and the king believed, when the king was playing this game, and the other person told him that all I want is for you to keep doubling the grain of rice on the chessboard. The king did not realize that his entire kingdom will go bankrupt and the supply will be more than the world supply of food. So the power of compounding is intact in that game as long as the doubling is intact. The moment the doubling starts falling, faltering, gets threatened, etc., it could be catastrophic. You could reach, for example, instead of the 64 squares on a board of chess, if you have reached 58, it's also like Kaun Banega Crorepati. When Mr. Bachchan keeps saying that you are now reaching the crore rupee mark or the 5 crore mark, you have the option of quitting. Sometimes it may be important to quit and to conserve the capital that you have than to keep betting on an uncertain answer that eventually may make you go bankrupt. And I don't have the capability to sort of comment upon certain things that can make me falter more than luck factor in doing well.
Thank you, sir. I understand. Thank you.
Thank you, sir. So Ravi, you have your set of questions. So if you're free, you can surely unmute and ask your question. So Safir sir, before that, how good we are on time?
Well, the match is over and we are chatting amongst friends, so it's good.
Great, sir. And apologies for the glitch part. Even I got so many messages, and from next time, I'm surely keep this in mind before doing any session. And as soon as possible, I'll upload the recording so that people can listen to it. So Ravi, you there? Anyway, so Safir sir, like the Corona event was one of an event. So how had been your experience during that correction? Because normal correction are part and parcel of the market, but again, that was altogether a different correction, and people were clueless what's happening around. So how had been your experience with that?
So I don't want to boast about this because it is something that has played in the past, and wherever somebody tries to boast, it is inevitable that they will fall. But I had one of the most treasured messages that I had came from Mr. Vijay Kedia, who sent me a message saying that the only two people that he knew who were bullish during the Corona time, and he said were Rakesh Jhunjhunwala and me, and he said that you were ahead of him because he became bullish only in July, but you seem to be gallivanting even at the start of the COVID itself, which basically means that even if my timing went astray for some time. In fact, I remember that one of my friends who was in the vicinity, I mean, very close to my house, and of course, during COVID times, you could not move. So when he would call me and he would say that, it looks very weird that the world will come to an end and we don't know what is happening. Even to get a bread, for example, you have to now wear a mask and go into a designated time to a shop, etc. I told him that, there will be an onset of huge efficiencies in the world, simply because in order to facilitate all this there will be a new genre of companies that will be created. And uh, and again, it is not, I'm not trying to take the credit of getting it right. For example, I could have been wrong for one whole year. We could have had many more problems, we could have had many more deaths, we could have had many other kind of ramifications. But the reality is, when you read books, you will discover that every single opportunity that came as a catastrophe, whether it was a plague, whether it was a war, whether it was the Great Recession in the United States, whether it anything, they are actually great opportunities for the creation of a new class of industries. It is like somebody, for example, does not have internet and he's very dependent on a physical mode of, say, selling. He gets hit, and then all of a sudden an internet company booms because he is able to deliver goods to you by internet. He's able to, the apps are able to do a job. Online deliveries become cause certain people who, example, are delivery boys to excel. So there's always everywhere in the world at any point of time there is a shift of wealth that is being done from point one to point two. And in that shift of wealth, somebody have with a very strong capitalist mind looks at an adversity as an opportunity. So at that point of time, it was a greater opportunity. I mean, I'll give you an example that in the initial days of COVID, if you recollect that when the market had crashed significantly, and it was not as if my portfolio was immune to that, there was a massive drawdown. Also, because we are mid cap and small cap investors, we had more drawdowns than the large caps. But the point was, it was not my desire at that point of time to buy consumer companies, just because I knew that consumer had to be, I mean, you would need to eat food and to sort of wash your hair. It was not my, in fact, my entire focus was to buy beaten down companies. So for example, if you found that there was IT that had not been given, there was beaten down, you said no, IT will cause this problem to be solved. Similarly, there will be utilities that may cause this problem to be solved. So like this, you have to look at the opportunity. Even right now, as an example, when Russia Ukraine happened, and there were issues to do with semiconductors, and there were issues to do with logistics, and we had the Suez Canal problem. The question was that there are companies that are not facing these problems that are also getting impacted by the market. For example, you knew that in Europe there was an energy crisis in terms of prices. The prices of the energy soared. So it wasn't so complex to think that in a world where energy price goes up so much, and energy is a critical cost, a cost to manufacturing, there has to be a focus on manufacturing activities that will, sort of do well. And the countries that were able to latch on to these opportunities, because they were still labor intensive, they were still cheaper in terms of labor, they still had room for reforms, they had manufacturing in place, they had very low capacity utilization, and they were happy to move up the quality curve, which basically means that they wanted to improve the processes, etc., would have had a good chance of manufacturing, of doing well. I may have missed some of these companies, but maybe may could have latched on to some others. One more point I want to tell you, that whenever crisis happens, while we look a lot at Indian companies and we benefited a lot from owning Indian companies, there is a genre of MNCs which are invested in India, and it is in the history of investing. At least I have seen it all throughout my investment career, that when MNCs become extremely aggressive about technology in a certain country, it's a complete game changer. If you go back into COVID times, the price of Asia Brown Boveri, that is, they had not split their business into what is now called as Hitachi Power, was about 800 rupees. The price of Siemens was maybe about 600 rupees. KSB pumps was about 500 rupees. So there'll be so many examples of some of these leaders who were investing a lot in terms of technology and were at a very low cost. And that their capital comes with a very high return on capital employed, which basically means that they have bring in new technology and they bring in very good financial ability to manage that. So you could have bought, and again, these are all examples of manufacturing stories itself, because all of them are manufacturing companies, but they sort of did very well. Those were my learnings, that every time there's adverse, like I'll give an example. How insane is this tweet by or report by Jeffries that market will fall 25% if Mr. Modi loses power? First of all, Jeffries itself expects Mr. Modi to win, because they have all been speaking about the fact that the market, if you read Morgan Stanley has come out with a report, I think it is of September or August of 2023, where they have said that they expect the market to rally 10% before elections, because that is the inevitable nature of their expectation build up, etc., etc. Now, let us assume from here, the market rallies 10%, and then they expect the market to fall 25%. In that 25%, FIs have already sold your market. The FI holding in India today has come down. I mean, somebody just released the data which I was reading on Twitter, that it's fallen by almost 10 odd percentage points. So, what is going to happen? First of all, you are basically betting on an event which is uncertain vis-a-vis the extent to which you're saying that I'm sure that it's going to fall 25%, but the consequences that can cause the 25% are not known to me. So markets don't behave like this. And if the market, as an example, if suppose, like today, suppose the market was down 3%, and this week it was down 5%, and this month it was down 6-7% because somebody read the 25%, then I think you will have a great opportunity of your life to rebuy the market and to buy a lot of stocks. And since you will not be ready at that point of time, you might as well make a list of what you want to buy. But I don't think that moment is coming.
Thanks, sir.
I mean, I'll tell you something. I was speaking to a friend who came to meet me just a few days back, Mr. Ayush Mittal, who's a very renowned investor, and I told him that everybody in the market seems to be talking about Russia, Ukraine. Before that, they were talking about China. Before that, they were talking about US debt, and then they're talking about the recession in Europe. But not even 1% talks about the fact that what if one of these problems is solved? Where will the market go?
So true, sir. So we got few speakers. Sunish, you can go first. Sunish, you are still on mute. Okay, Sanjay is next.
Thank you. Thank you, Prince. Very insightful talk, Safir ji. I've been following you for a long time and very impressed by your strategies both in brands and investing. So I wanted to, discuss. I have this major issue. I get into great companies and I wait for them to grow for ages and ages, and they don't. And I often find myself exiting them with a small gain, 5%, 10% here. And then a few weeks or a few months later, they grow into multi-baggers. They keep on a run, and then I'm scared whether to buy it or not. So, how do you judge an exit strategy? Uh, what is your view on how to calculate optimum position sizing? And I'll give you a follow up once this is done. Thank you.
See, thank you for all your kind words. Now, first of all, I answered this in a sense by basically saying that I do not put all my money into any company at one point of time. even if I have to buy a company that I'm convinced in today. As an example, I'll give you a very simple example. In one of my television interviews, and again, this is only for academic reasons, not for the purpose of recommending a stock, I spoke about my ownership in a large pump company in India. And when that interview came, they asked me that for how long have you held the stock, and I said that I may have held the stock now for almost close to 5 odd years or maybe 4 odd years, and the stock had moved up maybe 5 times during those 4 or 5 years. So they asked me, "Will you buy the stock today?" I said, "Of course, I will buy the stock today, because the very fact that I'm holding it and it has rewarded me has given me enough incentives to comfort me in the event my thinking is wrong. And so far, on the financial side and the capex side, the company, and the governance side, the company is not giving me any discomfort." Now that played on well, and that interview is in public record, and the stock from there has gone up another. It has doubled again from there, but that means it is now up 6 times or 7 times from my purchase price. I have bought that stock even last week. So I'm actually staggering my purchases on that stock because I don't know where the limit is. I mean, suppose that company does exceptionally well for the next 5 years, it can still compound at a very reasonably high rate. And this is what happened with Mr. Junjanwala, for example, in his investments in Titan. But on the other hand, if the company falters, if too much of noise happens on the market, if all of a sudden they do some unrelated diversification, they become a financial investment which is not their core strength, then I will start questioning. And similarly, I may time my exit in phases, because again, I'm uncertain about whether I'm right or wrong. Or if, for example, I find that, look, I waited for a particular company and quarter one, quarter two, quarter three, quarter four has gone by, and while the going may be tough for the industry, in all the 4 quarters the management has not shown the ability to outstand itself during tough times, then I will say, you know what, there's nothing wrong with the company. People have tough times, managements are doing a good job, but I'm not fixated or married to the stock, and I can go on from one sector to another to optimize my return. Then the question is, do I have the requisite options available to buy in other sectors? If the answer is yes, the decision making happens instantly. If the answer is no, I will sell and sit on money. If the answer is uncertainty, I will sell in phases.
Thank you, sir. The other point is I wanted to ask you is how do you decide on what kind of sectors you want to look at, and do you look more at fundamentals or charts or just your general knowledge in the markets?
No, I do not look at charts. I'm not a believer in charts. I would love to buy stocks even if they're at 52-week lows. I would love to sell stocks even if they're at 52-week highs. It doesn't mean that that every stock at 52-week high I will sell, because highs can get into highs, and it does not mean that every stock at a 52-week low I will buy just because it's 52-week low. I also don't necessarily only look at the past performance of the company, because the performance may be deteriorating. There may be, like I said, threat of technology. There may be threat of new business models. There may be some leading leader in a company may have left and may have disturbed things. There may be many factors for it. That is why, first of all, I'm diversified. Secondly, why I use time to my advantage. But my essential strength for me, and that may not be true for somebody else, but it works best for me, is that I am an avid reader, and I am trying to work more on my behavioral science of not having certain things being taken for granted, either for good or bad. So if you tell me, if I, for example, felt in the past that I will never buy, as an example, a certain sector, today I tell myself that that's a very poor way of thinking. I will buy any sector that I believe has the potential to make returns. The question is, will I own it for a very long period of time? The answer is, I will if the going is good, and I will not if the going is good and turns bad.
Thank you so much, sir. Thanks a lot.
Thanks, Sanjay. Yeah, Ravi, over to you.
Thank you so much, Prince, and thank you so much, Safir. It's always a pleasure, and you have to just take notes and go back to the space. I highly recommend people to go back to the space, to listen to the recording and take notes, and just look at the wisdom that is flowing in. So I have a very specific question, a phenomena that we've been seeing in the West. That there's a lot of interest in the Western markets to look at India, right? So especially given the entire geopolitics and where the world, both the economic ecosystem and the political and security ecosystem is moving around. So we also have BJ. Welcome, BJ. So what is a recommendation for people who are coming into the Indian market, and what should people really look at in terms of opportunities? And is there like a way by which folks who are looking at India for the first time, any insights into that? Maybe that requires a specific space later on.
No, I thank you for your question, and for all your appreciation and all of the invites and connects that we have on many other forum. But see, when we look at a country, the transformation of a country is not a transformation which is temporary in nature. It is not there is a lot of progress that India has made in several aspects, and I'm not limiting myself only to, for example, infrastructure. For if we today say that the roads in India are being made at a rapid pace, that is one level of transformation. Railways is the second level, digital India is the third level. But inevitably, whether we admit it today or we admit it after a few years, there is better governance standards that are setting in vis-a-vis the past. After all, just look at, as an example, yesterday the Supreme Court hauling up an NCLAT member for passing, going beyond his scope in in a case relating to phenolics. All these things, what is happening with, I read a report on the sort of transformation that happened with the PSU banks, and the principal defaulters of the past. For example, whether it was a Divan housing or it was XYZ company, they're not being able to get away the way they were getting away, and therefore the nature of transformation is permanent. Now, when permanent transformation happens, then there is a economic change that will cause India to become a to move away from a developing to a semi-developed to a much more developed country. For example, even if I look at socio-economic behavior, the number of people who urinate on the road are not as high as what they were a few years back, simply because wherever you go on the highway, you will find that now washrooms have been created. You would typically expect that in some of these places people will protest because maybe they have a 2 rupee entry charge or something, but no, they are not protecting, and some of these washrooms have a helper sitting there to clean, which is a complete, it's a very large ticket change if you look at it at a country level. So when you look at some of these changes, then the question is that how
Hello.
appropriate is our corporate to adapt to this. Now, one of the brilliant things about some of the Indian companies is that historically they have grown in the most adverse circumstances, because by their very nature they are much more frugal, much more, they don't believe in base cultures. They will try to squeeze out efficiency, even if it means, going on foot, for example, to rural India to find out what their demand is, or how efficiently they can reach out to products, and what kind of offer they can come out at Diwali, and how they can move up from a simple packet of biscuit to a much more value added product. Our companies have sort of done that over a period of time. They have also embraced technology. They also have a lot of support of the fact that as a community, Indians are not a wasteful community. Their job is not to exploit and to sort of attack other countries, but their job is to do their own things pretty well. They occasionally get into street brawls, but those are more of temporary things and not long term things, and they generally want to, each Indian wants to become better. It is, and in that endeavor to become better, there is a little bit of capital spirit that lies in every individual, that historically did not have a sort of a avenue to get channelized, because an average person could not approach a bank, an average person could not become a startup entrepreneur, he did not have the ability to use. Today, that entire change that enables a rickshaw wala to accept a payment on digital mode, a statement to be generated in a matter of minutes, to enable so many people to transact in a currency which is completely digital, and therefore you have even lost count of what a note's color looks like and what is denomination. is a huge game changer for India. And I believe that India should be on the onset of a multi-year transformation, which could hold a lot of promise for a lot of our industries and a lot of our sectors.
Thank you so much, Safir. Very well said, and absolutely on that. And probably next week we discuss Quad 2. So welcome to all the other folks. I'm going to help Prince. Just got out of a doctor appointment. So BJ, welcome to the Indian space. We love Canadians, so I'm sure you have interest in the Indian market. And Sandeep, welcome. Nikki and Sumit. So other folks, if you have questions, I don't know how much time do you have, Safir.
Well, right now I'm good. I'm talking. It's okay. I'll let you know if I.
Excellent, excellent, excellent. We love it. So BJ, over to you, and then Sandeep.
Great space, and yes, everybody in Canada loves India, despite some of the morons who squat in our Prime Minister's office in Canada. I'm referring to Prime Minister Blackface and the Khalistanis that he loves so much. But this too will end, I promise. It's going to take a little time. But Safir, I wanted to ask you something on related to startups. I'm involved in a startup now and another, startup project. One is related to media, and the other is a speaking tour with some very high-profile people. We're working on the decks right now, and I'm just curious. Something that I've noticed, because I've done this sort of thing, the last 15 years I've been involved in stuff. I've noticed there's been a shift from investors, and this might be more relevant to angel or seed investors. But there's been a shift in the dynamic, especially in the alternative media space, where we've gone from people who want to be angel investors. The two things have happened. Either they want to get involved in the creative aspects of a project and often want to introduce ideas that are antithetical to what has built their success. And I can give so many examples of that. So the first question is how would you suggest people involved in a startup deal with that? And the second question is, I'm hearing a lot of large type angel investors who I've known who've done a lot of projects, really big companies that you all would know, that they're trying to make this shift over to tokenizing projects with crypto tokens, which I'm not so sure is a great idea. But could you speak to those two things if you have any thoughts or opinions or ideas?
Yeah, see, first of all, well, thank you for your questions. First of all, from the perspective of startups, I feel that there is a complete transitory sort. There's a complete change in the way the startup ecosystem is functioning now in India vis-a-vis the past. Historically, the startups in India have been funded only by international players, and we Indians only never believe them. So what has happened is that they would only go to a, say, for example, a SoftBank, or they'll go to some Chinese company, and they will be funded, and they have done well and enriched a completely different class of investors whose job was also, because there was inadequate supply of the startups. Each startup model initially seemed to be unique, and therefore there was a question of passing the buck on to a second guy and a third guy in an unprecedented valuation model, until what happened is that these startups at some point of time, when they decided to hit the IPO, discovered that in their process of evolving from one part, passing the parcel to another person, there was no valuation left, and a lot of the valuation had overpassed, in the sense you had exceeded the valuation in round 1, round 2, round 3, round 4, and that caused some of these startups to list at a very less price compared to their IPO. In fact, they brought their IPOs with a lot of trumpet, only to fall fat on the ground. In the process of ultimate wealth creation, some of the startups have realized their follies, and in the process, some of them are now becoming more focused on their business and traditional business models, as opposed to, for example, an eyeball model or a acquisition model, endless acquisition model, which does not see the flow of cash flows. At the other side of it, a lot of merger and acquisition activities in India reach a point of saturation, not because there were not good opportunities in India, but because some of the promoters of startups, at least to my mind, got greedy in valuations, to believe that every startup is going to be the ultimate equalizer vis-a-vis an industry leader or an international example is a very bad sort of model. I'll give you an example. Like in the United States of America, there is an app which is called calm.com, and calm is an app which is based for meditation, and the company's market cap was at one point of time in several billions of dollars. Now in a country like India, if somebody thinks that they will create an app and he should be equated to billions of dollars at starting point, he forgets that even parents in India, even a yoga guru that comes to my home, and so many people can make me do things at a very low cost compared to that, and perhaps know more asanas and more, solutions to pranayam than that app, as an example. I can switch on a lot of meditation music on the radio, literally at a zero cost, or maybe at a 10 rupee per month sort of subscription fee. So what I'm trying to say is that as we evolve, and I don't blame these promoters, their job is to also maximize whatever work they've done. Everybody has a right to dream. But as we become much more advanced in our thought process, the valuations will sort of become more benign, which is why, for example, the VC funding in India is now drying up. It's the simple economics of demand and supply. When the price is too high, supply will sort of be there, but demand will taper. Then the price has to come down to more reasonable levels. They will leave more money on the table, like it was quoted in this book called Zurich Axioms by Max Gunther. When they will leave more money on the table, and when people see that by investing in startup they will have more returns, they will come back both on the investment table and the job table, because ESOPs will become much more attractive. And the biggest change that it will bring in is that it will change India from being just a salaried person to an entrepreneur. So I should be thinking in terms of not being just a salaried person, but an enabler. And that enabler could be a complete game changer for a large part of the community. So over a period of time, I think the startup ecosystem will do exceptionally well, and valuation will be far more in sync. Temporarily, there are certain problems that will hopefully get over in respect of whatever is happening. And sorry, I lost track of your second question because I spoke too much.
Vijay, you there?
Hold on, my phone's going. It's okay. You can go on to the next person. I need a few minutes.
Ravi, are you back?
Yeah, Sandeep, yes. Let's go to Sandeep and then Nikki and then Sumit.
Yeah. Thank you, Ravi. Yeah, great space. Thank you, Prince. I am originally from India. I live in the US right now. I do have some investments in local manufacturing units in Bangalore. The one thing I'm worried about is the political risk. Without taking the names of the political parties, we are hurting because the previous government, we didn't have any problem. There was plenty of electricity. Our manufacturing unit relies heavily upon electricity. Now, after the government change, it's amazing how an electricity surplus and budget surplus state became budget deficit and electricity deficit. So our industries are hurting, especially the manufacturing ones. Now we supply to local other units, other industries. Now it is becoming, for them, it is becoming less expensive to source the same materials from neighboring states which run on electricity. We sometimes have to use generators that cost us more. So, given this scenario, I think, when do you think India will move away from this, where industrialists don't have to worry about this government changes, and just focus on their business? And second question is, what do you think entrepreneurs can do to hedge against this kind of political risk?
Thank you for your question. While I'll just answer your question, the lawyer in me was sort of, tossing my head to think what was the question that I had previously missed, and I've got it back. That question was on cryptocurrencies and how it is being used as a mode of tokens and other things. Now, to answer that question, I just a few minutes back had read an article which basically said that many people are coming to lawyers and are getting their assets planned, and they're going to family offices and they're getting their asset plans where they're trying to convert some of their assets into crypto assets just for the purpose of avoiding payments in case of a divorce. So I found it to be hilarious that somebody wants to hide a home and convert it into a crypto asset because he will escape, the sort of fee that will have to be paid in the event of a divorce if it was decided to provide rights. So I believe that a lot of the assets which are being masked are being masked into temporary modes, just because of tax concerns, disclosures, and many other forms. I'm not an expert when it comes to knowing that, and I would not like to cross the line in terms of not treading upon an area where I'm not an expert. But personally, I'm not a believer in cryptocurrencies, and I have not invested a single rupee in cryptocurrency, nor do I intend to. And if a client comes to me and he talks about tokens, I will just give him an answer on legality, and I will not venture out into saying whether it is good or bad. So time will itself prove me to be right or wrong, and that really doesn't bother me, because I even if I'm wrong, it doesn't bother me, because there may be other things that may work for me. Now, coming back to the question that was put on the sort of changes on power and the government stability and other elements, see, what is happening is that right now there is a desire in a lot of people in India to change. That change is coming in from their exposure to what I call as basic literacy. That basic literacy at some point of time was to go to school and to get educated, maybe up to class 5 or 7 or 10. And if you would recall, in a lot of in many years, people would say they are matric pass, and that word matric basically meant the 10th class, and it was a big accomplishment. Today people are moving away from that into becoming street smart. When they are enabled the use of technology, for example, to a pan wala, rickshaw wala, or a taxi wala, etc., they are causing them to become street smart, which basically means that they're teaching them how to do business, and that consequences of that may be coming just by the adaptation of digital. So I first of all believe that when people have the mindset towards business, then the first thing that a country cannot falter upon is business prosperity. For example, today itself there is an article that has come out from Chris Wood, where he talks about the fact that India can see a substantial amount of FII inflow, provided the government takes more efforts to increase the ease at which the FII flows come and go from the country. And they have cited examples of, and he has cited examples of emerging markets where it is far easier to invest than India. So when you try to sort of come out with a structure that becomes more interaction between a man and machine, for example, in the power sector, if it comes to the power exchanges or the distribution or tariffs or online payments, etc., some of these problems, while they may be frustrating for businesses, are transitory in nature. As an example, there was a time in India, and you would yourself be well conversed with that, where many parts of India would have huge power cuts. We would also have illegal loops onto wires in order to provide power for purposes of which were not legitimate, and a lot of people would who were very well influenced and rich could afford to sort of tamper with their power meters and simply evade paying basic costs just because it gave them some sort of pleasure, which was not really in the interest of the nation, but somehow they were penny wise and pound foolish. Today, with the kind of way the power is being supplied, we are not in a situation where we have shortage in any part of the country. Even when I go to my hill home and I ask him, if at any point of time, if I ask my caretaker if there's a power cut, he says it will not last for more than 10 minutes, and it's probably been caused by a weather disturbance rather than by the effect of non-availability of power. In fact, India is now trading power and is therefore surplus in most aspects. Second point of thing is that inflation is a real concern for the country, and I have not seen a more prudent banker, at least in the last several years, as our current Reserve Bank of India. So the entire focus of the Reserve Bank of India has just been inflation, inflation, inflation. They obviously had a concern to do with the NPAs of the banks, which is something that they have addressed. Now, in order to tackle inflation, inflation cannot be tackled overnight, because whatever solution India is able to appropriate or suggest for inflation would only be, for example, if they say, let's open the grains and therefore make grains available to people at a cheaper cost, and for 1 month bring down the cost of inflation. The point is that that month you will survive, but you will not be able to survive in the onset of global disturbances beyond that next month. And if you run out of supplies because somebody buys it and now hoards it, you will have another different kind of a problem. So what India is trying to do is to at least make an effort to up output, and whether it is an agricultural output or whether it is a warehousing output or it is the elimination of middlemen in the entire transaction, or a lot of these factors will become big catalysts for efficiency of doing business in India. Now at the same time, an entrepreneur like you may find that efficiency is setting, for example, in infrastructure, but has not set in cost. Or for example, it is now cost has become more transparent, but you have problems to do with legal approvals. So, in order to tackle that, the question of how India improves its standing in the ease of doing business, some part of it is by automatic processes, some part of it is by delegation to technology, and some part of it is to do away with archival laws that are too much of an obstacle for somebody to do business. I'll give you a very simple example because I'm a practicing lawyer. Today in court, the courts are giving real damages, and I'm not talking about just a token damage that was provided at some 500 rupees in the act, etc. For breach of contract, damages are running into crores and crores of rupees along with interest. Sometimes these interests are also being charged, and some of these penalties are also being charged against the government, and they are becoming more sort of forceful. One of our colleagues, Dr. Prashant, who happens to be on Twitter, I just saw his tweet early this evening, where he said that he filed his income tax return yesterday and he has got his refund today. So there are real changes, and then people like him and many others will be encouraged to believe the fact that they should be filing the returns, because historically, for 10 years, I did not even know how my return is going to come and how my refund is going to come. And my chartered accountant will say, but I have to physically go and I have to meet an officer and and he's demanding XYZ in order to do this, and you'll be completely lost. That change is now for real. When the change sets in more and more, like for example, if say Apple, who is now producing in India and has registered a very high profit for India, comes and tells the world what it has done, or for example, Boeing comes and says, you know what, we set up a facility in Bangalore and aviation. Earlier, we had to basically go and meet, five different prototypes of people in order to get a single plane to be sold. But today, they're selling directly to the private sector. The private sector, for example, is being able to convert those into freight planes at a later level. So when the transition is happening, it will become real. uh, I also believe that people like Reliance Industries, who have been in the country for the longest and who have gone through so many sort of uncertainties with the governments, would not get so overtly aggressive in terms of growing their business, particularly on segments that are consumer centric, if they did not have the confidence to believe that the consumer businesses will last without much of interference. So telecom is the same example. I mean, at one point of time, we used to keep thinking how ARPUs in India will go up, etc., etc. They have gone up. Petrol prices, we used to always believe that every rupee of increase in petrol prices would cause a strike. And today we have moved on to the level where petrol prices are very high in India. There are a cost for inflation, but at least that money has been deployed back into infrastructure for the purpose of improving those roads. I do personally believe, at the risk of being completely wrong, that in a matter of about 2 years from now, India will for certain consider a reduction in personal tax rates, because the collections will become buoyant, the leakages will be plugged, and the curtailing of the tax rate in India itself will cause a higher amount of saving and a belief of increasing the incentives to become towards businesses.
Thank you, Safir. Before we go to you, Nikki, I know that Sumit has been waiting for long. Sumit, are you still here?
I guess he got dropped.
I think did he
Anyways, we move on.
dropped?
No
I'm very
issues,
sorry.
Ravi. Yeah.
Let's move to Nikki. Yeah, Nikki. Uh, I don't know if Nikki, are you taking the thing? We can move to the next one.
Tuku touch. Okay, Nikki is there.
Yeah, yeah, Nikki.
some issue, I guess, on her part. She can drop and join again, maybe. Meanwhile, Toko touch. Uh, okay, Toko, you can unmute and ask your question, please.
जी नमस्कार, धन्यवाद। और आप सभी को ये बहुत अच्छे टॉपिक और गेस्ट के लिए बहुत बहुत शुक्रिया। मेरा सवाल है लीडरशिप को लेकर। तो जो लीडरशिप चेंजेस एस्टैब्लिश्ड इंडियन कंपनीज में हो रहे हैं, फॉर एग्जांपल कोटक महिंद्रा बैंक हो गया या फिर रिलायंस हो गया, और चूंकि लीडरशिप वन ऑफ द फैक्टर्स है टू सिलेक्ट एन स्टॉक and hold it for long term. I think कई prominent investors ने बोला कि integrity of leadership is very important when you select a company. तो मैं ये पूछना चाहता हूँ कि how is that being seen by the market experts, and some comments on that, please. Thank you.
Thank you, sir, for your question. सबसे बड़ी बात, I'll answer your question in English because some people may not be familiar with Hindi. But one of the biggest changes in India is that India is only at the start of corporate governance. The fact that India is now creating an ecosystem of reporting, a concept where companies even have to give an indication of which analysts they are meeting, a concept of by SEBI of requiring a disclosure to be made within a certain the annual general meeting has to be communicated within a certain number of time within which it is completed. The fact that results have to be complied with within a certain point of time, the fact that the scope of adjustments have to be qualified by auditors who previously got away by a lot of things but now are being made accountable post the Satyam test and other kind of scams that have happened, the fact that there are audit committees that have to sign off the roles that are being performed and the sort of qualification that are being made, the fact that there can be an ouster of a director on the ground of governance and they can be absolutely barred, the fact that judicial members such as NCLAT are summoned by the court and are told that you are not acting in the actual interest of the process, such as that is happening in Phenolics of today. The fact that we have been able to create haircuts and bad bank system, and the bad bank system is now on the verge of being wound up, and people are able to create asset reconstruction companies and get away from it. The fact that you are able to stop people at the airports from running away if they're running away with money, which was not a condition previously. After all, how many people have now been blocked on lookout notices? Are all changes in the right direction. Proxy advisory firms have now set in. They're all changes in the right direction. The only point is, let's not forget that we are at the verge of this change. Now, some of this change is very, very good, which I encourage and I believe is going to be extremely beneficial for the country. Some of this change may not be good because there may be authorities, and when I say authorities, they may be more of regulatory authorities, etc., that may be overdoing their bit generally. But I believe that that is also a transitory phase, and they will get over with, because now there's so much of exposure. I mean, just look at the point that even a small incident comes up because somebody or the other captures it on camera and puts it up on social media and then tags somebody and says, like, what are you doing about it? And now you'll have a police guy coming and saying, no, we've arrested that person and you've done that. Digital India is going to cause a massively educated and hopefully a much more well-behaved India in times to come.
Thank you very much.
Thanks. So, Nikki, you there? Ravi, over to you.
No, thank you so much. Just wondering whether we have, Prince, do we think we have more time, or you? I'm just looking at, because you've been going for 3 hours now.
We are good as far as Safir sir is okay. I'm
I
totally
think we
fine.
can try if we can speak for the next 10 minutes and then probably wind up because you're right.
Excellent. Okay.
It's been a long session.
Yeah, I think again I would recommend people please follow Safir, Prince, and all the amazing conversation we got. Highly recommend to listen to the recording. I will. I had a doctor appointment unfortunately in the morning, but let me go to now. We have Manish. Manish, please ask your question.
Hi. Thank you. It was a very, very insightful session. Just wanted to get some insights on the logistics segment because we are seeing many new companies getting listed there and a big, say, transmission happening from the unorganized to organized space. So, if you're India's logistic segment, entire segment, looks to grow further from here on?
Thank you, Manishi. I believe that the logistics sector is again a sector that is going through a massive, massive, massive opportunity. The In the logistics sector, there will be a great onset of combination of factors. First of which is the ability of the company to have warehouses, because warehousing initially is not so easy. It is a huge capex for people to acquire warehouses, even if they're on the outskirts of cities. Some of the land, for example, cannot is even if it is available, is not cannot be converted into warehousing, because it has to be kept either for purposes such as railways or for agricultural purposes. Some of the people are interested in even selling it for commercial purposes, and therefore, warehousing by its definition needs a very large chunk of land. Technology adaptation is was initially not there. I mean, if you look at an example of COVID itself, pre and post, how many people before COVID were getting orders the way they are coming in today? How many people understood how to generate an OTP to a guy who came to your doorstep? How many people were able to track the consignment of something? So a lot of expenditure has happened from the logistic players on technology, on setting up. Whenever I go to the Delhi airport, and I see whether it is Terminal T3 or it is Terminal T2, how many facilities have been created there that existed a few years back. So a lot of capex has gone into the sector. The sector has seen slowdown, which is caused by other factors. For example, if there was a slowdown in the online business, I'm telling you right now, from the data that I have been reading, the offline business seems to be doing better than online. But there are certain businesses that cannot be okay, that are inevitable. For example, cars. If we say that the car business in India was impacted somehow because of semiconductors, then at some point of time that problem will be solved, and cars cannot be transported online. They require logistics, and that's a profitable logistics. Similarly, cold storage. If you can map the entire India, and you can go to different random parts of India and think that what is the level of penetration of cold storage. But today people are getting more conscious about the freshness of products. They're getting a little more conscious about even preserved foods, etc. The industry is sort of at an onset of going. A lot of people now like to bring food from outside, which means that dependency on cold storage, outside means outside their homes, the cold storage goes up. There has to be time is becoming very important as a competitive advantages for business. As an example, if I'm a lawyer and I have to send you papers, and I take 3 days because I've gone to a courier which I don't know. Initially, there's so much of unorganized sector that I've lost that package. You will come and say, my stakes are very high, the documents have not come, etc., etc. So there are many things that are working in that form, which require the logistic industry to do well. India will also become a sizable player in the XM market, that is export and import market. And there itself, the role of logistics is being redefined. Earlier, logistic was only a carrier. Today, logistic has got entire back-to-back operations of chartered planes. You've got operations of clearing agents. You've got the computation of duties. You've got the collection of duty mechanism, which were not seen. So there are a lot of value-added services that are coming in. I believe that in the next few years, the logistic players in India will become extremely large in their operations and way better than what they are because of the capex that has just been undertaken. I mean, I'll give an example at a global level itself. If you study what DHL and their subsidiary Blue Dart have done, they've invested heavily in planes. Now that money has gone out of their pocket to buy something upfront. And this is not like an Indigo model where you block and you're able to do a sort of a transfer to another company and have an extraordinary gain. This is for end utility. So they will be same thing is happening in shipping. If you look at shipping also, that industry is going through a complete metamorphosis. So there will be a great opportunity because international trade is not coming down. In fact, trade will only go up from here. And also, the thing
Very
is
true,
that
very true.
right now it is not striking people, but logistics will become a very, very critical point for employment. See, take an example that our transport minister just very recently had made a statement that, for example, trucks on the road will now need to have air conditioning for their drivers, which means that their comfort factor for transportation will go up. If the comfort factor goes up, we believe the fact that that delays will not happen. Therefore, efficiency will go up. We believe that accidents may not happen because they will reach in a much more comfortable state and perhaps get a night rest instead of having to sleep in the truck at night and sort of getting groggy and driving and sort of getting entertaining themselves with a bottle of liquor, which which jeopardizes so many other things. It's a complete game changer.
So true, and we also look forward to the space. Manish, any follow up on that?
No, thank you, thank you. I think this was very, very informative, and we think companies like Delivery, TVS Supply Chain, who have recently been listed, but I think that the way that they are building up the capability and capacity in this space and the usage of technology, artificial intelligence, those things are definitely indicating lots of positive things in this particular segment. And hence, just wanted to get some bit of insight from.
Hello.
Yeah, Prithvi, you can go.
Sorry. Yeah. So hi. So thanks for opportunity. So my question is, Safirji, I'm from Maharashtra, Western Maharashtra. I'm seeing a lot of smaller tractor companies like 20 horsepower, 30 horsepower tractors are showing in last 4 to 5 days, 5 years. So what do you think in the next 5 to 10 years, the prospect of the agriculture related mechanization of the or the companies like, for example, Mahindra and other companies, and the trade related to the agricultural commodities with the other countries? Thank you.
See, sir, it's very simple. With a higher population, we need more food. And for more food, we have to grow more. And in order to grow more, it is not as if land is growing. So it means that the only way the problem can be resolved is by increasing the productivity of the land. Productivity of the land cannot be increased just by deploying more humans on the same plot of land, because it will interfere. For example, you take a tree and you want to pluck mangoes out of it. You can't say, okay, 10 people climb the tree, then to 20, then 30. At some point of time, there'll be a limitation. So automation is inevitable. Automation will cause a lot of efficiency. There's also factors such as wastage. Right now, for example, when the farmers pluck their vegetables and fruits, there's a lot of wastage because the goods are perishable in many cases. We do not have, like I said, cold storage is one example. We don't have same day delivery. There's a huge price disparity when it comes to the gap between, for example, say a guy producing in Nagpur and supplying in Delhi, or Nagpur is still, I mean, for example, in the village and supplying to Delhi, because it goes through so many chains that by the time it reaches Delhi, the freshness part is gone. The middlemen have taken away their entire thing. There's a lack of transparency in terms of pricing. All these are the exact kind of problems that the government is conversant about and is trying to solve. Now, for example, if you do a Google search, you will discover that India is now working on a project which is called as One State, One Product. I'll give you an example of that. That in that, for example, the government discovers that there is an orange that comes from Nagpur. Now, the Nagpur orange is the only orange in the world that is capable of being peeled. If you compare it to the Chinese orange and you compare, they cannot be peeled because the skin is very tightly stuck onto the seeds, etc. So they now discover that the Nagpur orange entire value creation happens in Netherlands. It is bought in India by bulk. It is bought by producers there, and then they are able to supply it to US and European markets at a significantly higher cost. So efforts are being made in order to streamline and improve that entire thing. Like this, same thing with banana, same thing with so many things that with haldi. You look at the way the Indian haldi industry is now being. So when these problems become recognized and they become enabled for eliminating the sort of wastage that there is because of perishable goods, accidents, lack of storage, lack of ability to know, with their freshness, etc. Then you will find that the going will become extremely, extremely good for modernization and the use of implements in agriculture. I mean, the farmer, the day he realizes that he's being rewarded because of money coming into his pocket. I mean, I will even go to the extreme of the extreme of making a comment which may not be liked generally, but I believe it is inevitable. The moment the farmer becomes rich, too will be taxed, and that actually will cause a far greater buoyancy in our tax collection in a country. It will not be that a farmer at some point of time, he becomes an industrialist. He becomes literally like he owns all these mango plantations and orchards, like you have wine orchard. By that logic, Sula should not be charged, no, because they'll say we are agriculture of grapes or something. So that change will happen at some point of time, and it will be very good for these, like you're saying, these small tillers and these small tractors and maybe other hand power equipment. I mean, I don't own the stock, but I was reading that Honda essentially now exports agricultural implements from India to the rest of the world, and most of these are like hand tillers and other things.
Thank you.
Thanks, Prithvi. So, Safir sir, any recommendations on book names and resources from where the retailers can, I mean, especially the ones who are just beginning or have very less experience in the market, so that they can benefit by, as you were mentioning, that trading is very important.
My answer to this will be very biased now, because I'm writing a book right now, and that book is on investing. And that book, in my, at least I think so. Of course, rest of the people will judge when it comes out. I believe that that book is the first of its kind in the world. I believe that book carries examples and anecdotes which have never come out in domain. I believe that it explores the tougher side of investing than the easy side. For example, the purpose of the book is not to tell you that you should buy companies at high ROEs, because you'll say I've read it in 100 other books. It was not to. It is to basically tell you from the learnings of all the things that we are doing on these chats, etc. I'll give an example, which is not a part of my book, but I'll give an example. Many investors, they actually do not invest thinking that they have very little capital. I do not understand why that becomes a block in their mind. They feel embarrassed to say that because I have 5,000 rupees, I will not invest. The day I will have 5 lakh rupees, I will invest. But that journey to 5 lakhs will happen from that 5,000 only, no? So that journey has to start. Secondly, when they invest, they're not only putting the money to use, they're also putting their experience to use to gather knowledge that will become an enabler. But they don't do that. They feel embarrassed. So first of all, we'll have to throw away our embarrassments, because it is like saying, by the same logic, if a guy says I eat only one roti a day, are we going to say that we are embarrassed? He may say I'm doing it for good health. I may do it because I'm cutting down on grains and I'm increasing proteins. Or I mean, whatever. I mean, there can be so many reasons for it. So there are a lot of misconceptions that must go. We can't. I'm not a registered advisor and I'm not a stock thing, but it's my role in whatever limited capacity I can. I'm trying to educate people. It immensely pleases me when somebody sends me a message on Twitter to say that as a result of your thing, I did not get panicked and I stayed on with the thing and it did well. Or for example, that I have started reading a newspaper or I've started reading a report. I feel very happy, because I feel that I have done something at least for my nation and for my fellow people in terms of a financial literacy. Because so whatever it is, at the end of it, if we create a community of people who start sharing knowledge and say we are not going to be duped, we are not going to fall into these night schemes and this fly by night operations, and we will save our money, hard earned money, and put it to use, we would have done exceptionally well, not only for ourselves but also in terms of capital formation.
Indeed, sir, and we look forward to the great book, because I believe unless it is coming from the heart, no one can speak at that length, that too with great clarity and quality insights backed by data and study. Really grateful for that, sir. So, Ravi, anything on your part, or maybe any questions to the existing
No, no,
speakers?
I think excellent as always. But I just wanted to know about the timeline contribution to many listeners and many of us, including me.
So,
So, what is the
so Ravi, I mean, we can ask last one or two questions, because it's almost 3 hours for Safir sir, and definitely we can arrange for one more session from your handle down the line, wherein we can accumulate the remaining speakers for today.
Yeah, I will tell you something that for today we have done a fairly good session, and 3 hours is extremely exhaustive. These days, even Hindi films are not made for 3 hours. In fact, we didn't even have a song and dance, and we lasted for 3 hours. So let's not tax people. Let them be, and too much of knowledge or too much of talk also causes people to get confused. Now they will say that now we are going into one thing or the other. It is better to do smaller and more frequent sessions. We can do another session at some any point of time where people are more comforted. We will be able to bring freshness also. We'll also be able to solve the sort of sound problems that certain people had, and make a better interest. Of course they will benefit from all the recordings there. It will also give them the ability to mull over what has been said and to come with more attuned questions, which may be more purposeful to them rather than sort of blabbing about whatever I have to say. They may want to have their own side of it, and therefore I think we will continue. It's let us be the borrow from the success of Star Wars and do episode 1, 2, 3, 4, 5, 6, 7 and make a sort of a thing, or for example from a beautiful Mahabharat or a Ramayan, but not to have the entire story said in one day and people get tired and they say, "Arey, it's lost the entire fun." Don't forget, Ramayan developed each character extensively over a period of time. Each one of them was like its own world, and therefore it became much more fascinating, and we were able to grasp from it.
Absolutely. I
Great,
think,
sir.
sorry, just to say that, absolutely. I think we should definitely take that on, Prince, and think of, we'll DM and probably look at this as a, maybe a, bi-monthly or at least a monthly talk. It'll be great. I think with that, really want to thank Prince
Surely.
and thanks, Safir, for inviting me and to be part of this very important journey. And as you said, the journey is only beginning now. The India story is going to go to a higher level. Back to you, Prince.
So Safir, we close for today with asking last question, which is very important, which you even tweeted about the time management thing. So what's the mantra of time management? And because many questions are around that, even in my DM, people are asking about it.
So the answer to that is that if we study the view of Mr. Newton, he said that human capabilities were reduced by the creation of time. So until a man picked up a watch and started seeing time, he was obsessed in doing his work in the way that he should have done it, except that time came and started telling him, no, that you have to break because now you have to do this and you have to do that. In other words, if you are passionate about something and you do not keep a track except for passion, that passion will create more than 24 hours. But on the other hand, if you tell yourself that no, I will only be passionate from 8 to 9, and 9 to 10 I cannot do this, and 10 to 11 I will not do this, then that limitation will come in and will not allow. Ironically, I can even prove this in modern times. While Newton had said it many decades back, but I'm giving an example. The number one factor that shows this is the casino. When you enter a casino, they do not have natural daylight, and they remove all the watches. And despite the fact that people are actually betting to lose money, they keep betting more and more because they've lost track of time. So their passion is on their bets rather than on the time factor. They don't know what is morning, evening, after, and they keep having their meals. They don't even know whether they're having lunch or dinner because they've lost track of their passion of pursuing whatever is happening. And we should all continue with our passions, and with lighter moments in life. We should not just have serious talk, we should also have lighter moments so that we all enjoy our journey and make the most of it.
So true, sir. What a great message to end with, and really grateful. Thank you for doing this, and this is really helpful for our audience. And I sincerely apologize for people who are not able to listen it live. But as soon as possible, I'll make the recording live so that everybody, those who were facing the problem, can listen to it. And meanwhile, they can also listen to the recording on because this is recorded. So on tweet also this will be available, and I'll ask Safir sir to maybe repost it on his handle so that his followers can definitely listen to that. And meanwhile, I'll work on the YouTube recording. Thank you so much, sir.
Thank you so much. Thank you.
Thank you to all of you for your involvement, for your passion, and to all the listeners for spending all these huge 3 hours time in an unannounced film with no songs, like I said, except that there was no villain and there was no hero. We were all together in it.
So true, sir. Good night, guys. Good night. Thank you,
Well said.
everyone,
Good
for
night.
keeping
Take
it
care,
with us.
everyone.
Good night. Take
Thank
care,
you.
everybody.
Thank you, everybody.
This space was downloaded via spacesdown.com. Visit to download your spaces today. 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 Download